that they are not even to be mentioned. For the first time in 50 years, we are now seeing reverse migration as migrants go back home, leaving more housing and more jobs for Americans. In the year before my election, all net creation of jobs was going to foreign migrants. Since I took office, 100% of all net job creation has gone to American-born citizens, 100%. In the end, government either serves the productive, patriotic, hardworking American citizen, or it serves those who break the laws, cheat the system, and seek power and profit at the expense of our nation. Look at Minnesota, where Somalians have taken over the economics of the state and have stolen billions and billions of dollars from Minnesota and indeed from the United States of America. And we're going to put an end to it. For so long as before my election, the vast majority of good and decent Americans were forced to watch as corrupt politicians plundered the halls of power, exploited our taxpayers, and pillaged every system that makes civilized society function. But not anymore, and you see that every day, not anymore. We're putting America first, and we are making America great again. Very simple. We are making America great again. Tonight, after 11 months, our border is secure. Inflation is stopped. Wages are up. Prices are down. Our nation is strong. America is respected. And our country is back, stronger than ever before. We're poised for an economic boom, the likes of which the world has never seen. Soon we will host the World Cup and the Olympics, both of which I got. But most importantly, we will celebrate the 250th anniversary of the Declaration of Independence. There could be no more fitting tribute to this epic milestone than to complete the comeback of America that began just 1 year ago. When the world looks at us next year, let them see a nation that is loyal to its citizens, faithful to its workers, confident to its identity, certain to its destiny, and the envy of the entire globe. We are respected again like we have never been respected before. To each and every one of you, have a Merry Christmas and a Happy New Year. God bless you all.
All right. That was the presidential address there, at least the tail end of it. Figured I'd jump on early, go ahead and get the show rolling. I think we're still waiting on Dougie here. How is everybody? We're episode 6 in. Money Mobsters. Dougie will be joining us shortly here. I've sent him the link, so he'll be jumping in at any point. Hope everyone's having a good week so far as we get into things. Just a few more big trading days left before Christmas season rolls in. We'll see if Santa comes or not. I wanted to kick things off with just a quick segment here on Google, just a clip from the analyst Mark Mahaney that I wanted to share. A lot of people have been asking me, what are you thinking about Google? Is it overpriced here? And, of course, as always with the show, this is not investment advice. I'm not your advisor. Do your own due diligence. This is an entertainment show, but people have been asking, how I'm viewing the situation, and I'm very overweight the company, and the stock has run up a lot. And the argument that Mark Mahaney from Evercore ISI does great research on internet companies, the argument that he's going to make here is that the stock was fundamentally underpriced to a deep discount to begin with, and that not only did it get its re-rating here, it's getting a little bit of credit for what's to come, but that maybe the fundamental story hasn't actually played out yet. So, over the course of, half a decade into the future, you still have a story here that's developing. Yes, Google doubled, but does that mean that they can't fundamentally improve in their income statement and the value that they return back to shareholders? through expanding margins, continued top line growth, and just continuing to have software eat the world. They've had this network effect and flywheel running for a few decades now, and they're seem to not be slowing down. They've crushed YouTube. Search is still rolling. Cloud is about to be growing 40%. So without further ado here, I'm going to let Mr. Mark Mahaney take it away.
In person. We mentioned the Google 60%. Most of that move was in the second half of the year. So it's sort of an interesting dynamic here where it's no longer a top pick because of the recent run, but you still think it is firmly in the hold, in the buy camp, I should say.
It's a quality compounder. So we've had a stock that went from 15 times earnings to almost 30 times earnings in a 6-month period. You rarely ever see that. I think the real opportunity was it was so oversold. I'm not sure it's overbought. I don't think it is. I think it kind of hold its multiple. It's kind of at the high end of the Mag 7 in terms of the multiples, but I think it can hold it. And now it's a compounder, which means I think they can grow 20% a year. So the stock's got that sort of upside. It's not dramatic, but it's a name that you want to stick with because they've kind of proven everything they sort of needed to prove, which is that they're successful up and down the tech stack. What else could get much better about Google? I think that there's a chance for a re-acceleration in revenue at search, at YouTube. Waymo's still building out, and cloud's going to be north of 40%. I think that kind of growth next year. So I just like the fundamental setup in it. If you're a long-term investor, you stick with the Google.
How do you see Gemini 3? I mean, part of the upswing in Google shares is a perception that Gemini 3 is doing so much better. How does that play out into 2026 in terms of the trajectory? What do you see in terms of uptake and other monetization?
I think actually that's one of the risks to Google because this is going to go back and forth. And, the ChatGPT 5.2 came out. I'm not sure it overwhelmed anybody, but, the models get better and better. And so the idea that Gemini is going to be the leader of the large language model board for the next year is probably unlikely. There's going to be a lot of competition in the space, which is great for all of us.
Breaking news after hours and after this video was recorded, OpenAI is going to be raising $100 billion more to $750 billion valuation. So at some point, they're going to have to be thinking about monetization.
In the meantime, I think you're going to get a new ad model at some point, or you're just going to get an ad model coming out of ChatGPT. So there's going to be real competition coming after search dollars. We haven't seen it yet, but it's coming. So you got like a 1 or 2 pending negative catalysts. I don't think it takes the stock down a lot. And if it did, it'd be a great opportunity to leg into Google stock.
Do you think, though, on the large language model front, that it's about the model itself at this point? Or I actually think the models are almost so good that there's an argument made it's about who productizes the models best and fastest. Meaning, and I've always thought that Google should be the winner of this by a long shot, given, the proliferation of Gmail around the world and calendars and, by the way, Android phones, that if they could productize things that actually, really texted you back and really gave you an email to return and really saw where you were going next and was able to sort of think through all the different permutations. But for whatever reason, they haven't gotten to that place. And then the question is, can an OpenAI, which doesn't necessarily have all that data, but maybe through APIs into all these other outlets or through an Outlook or Microsoft, can do all of those things?
Well, I think what you said, the first part is extremely important. If Google got the right model, if it got the leading model, it had more monetization opportunities than anybody else because it could roll its large language model. It can roll Gemini 3, which they did very quickly, into YouTube, into Gmail, into Google Works, into the search, into YouTube, into across all of their assets. So could they monetize it? Absolutely, they could. ChatGPT is not going to be able to monetize as well unless they build out those applications that have got 1 billion users here, 1 billion users there. That was always Google's advantage. The question is when would they really turn on the product? And it helps that you had a lot of great competition from ChatGPT for them to do it.
But I think the question long term is, are people going to go back and forth between a ChatGPT and a Gemini or some other service? Or do you think that you get sort of, because it's built into the product, that people then stay there? Or you could argue a flip side, which is the sort of persistent memory argument, which is right now ChatGPT has almost better persistent memory, knows you better, arguably, because it, knows you better in terms of like maybe how you write or think, but it doesn't know all the data about you unless it's porting in through APIs into other systems?
I would hope that people would kind of use both and maybe other large language models. I don't think they're going to be that many used in the future. I think we'll get some sort of consolidation here, 2 or 3, maybe 4 max large language models.
Does that mean that the whole business is commoditized? And therefore, then is there the value prop?
This is an important question that he's asking here, because the narrative is starting to shift in that you have Google sucking the oxygen in terms of the economics out of the room, where they have so many damn tokens now at this point that they can just drive the economics into the dirt for any other answer machines. Look who we've got here. Mr. Dougie, what's going on?
How's it going?
I saw that Trump was streaming and he was doing his address. So I figured I'd jump on a few minutes extra early and caught the tail end of that. Did you happen to watch any of it?
I was rewinding and I was like, wait, Austin's on now? He's not going to wait for POTUS to finish talking?
Well, that's why I wanted to come on, because POTUS was on.
Oh, so you're just going to talk over the president. Okay, I see how it is.
No, I was letting him talk.
You have to say is more important than the president of the United States. We're having a conversation here. We don't even know what's happening.
So I just rolled a clip here of Mark Mahaney from Evercore ISI talking about Google, and they're wrapping up the conversation here as it pertains to LLMs.
If you say to yourself, is ChatGPT or OpenAI worth
I was listening a little bit.
Possible.
I guess if I felt like there were going to be 20 large language models, that would scream commoditization. If there's only going to be 3 or 4, that probably doesn't mean that. There'll be a couple. It's just that those large companies, the best models, are going to have a data personalization advantage at some point, and consumers are only going to reach out, and businesses are only going to.
You're not having it.
Every single one of these people is living in 1995. They're talking about email. They're talking about calendars. They're talking about Outlook. Bro, we are not going to be using any of that crap in 10 years.
They own more data points than that.
Or AI has failed, because you're just making us faster at crap that's already crap, and you're adding more crap to the crap that we have to filter.
Wait, what is it exactly that you're picking a bone with right now? Because that was kind of broad.
Email has been around. I specifically was hearing them talking about, Google's advantage, and they have one because they have data. But they're talking about having your calendars run better for you, having you had secretaries managing calendars since the 1950s. Now you got email. We've had email since the late 80s, early 90s. And now you're going to have agents checking your, helping you write better emails. That is absolutely useless stuff. It's why our boy Amit is wrong when he says that the form factor is not going to be glasses. The form factor has to be glasses. It has to be. All these guys are talking about, data. Okay, so we're going to very rapidly, and we're there already, experience a time where the LLMs, these are freaking chatbots. That's useless compared to what we're going to be doing. Okay, the total throughput. Let's think of this like an Elon Musk would. Okay, the total data throughput that you can communicate with a chatbot is based on how quickly can you type and how quickly can you read. And maybe you can do voice to text and go a little faster than typing. Some people actually type faster, but you've still limited there. Your total word count, character count that you can process via text is, if we were to put a data size on it, maybe a megabyte per minute, but probably significantly less. Probably on the order of.
So basically,
If you
to
can
summarize, you
read
just
and
don't
write,
believe in like
let's just
the personal assistant story.
no, I do. Where these short-sighted fools do not understand where we're going is we have to raise the data throughput for humans. Otherwise, there's no point in building super intelligences that think a lot faster than us, because it has to dumb itself down to still deal with, maybe 1 kilobyte, right? I mean, that's 1,024 characters per second. If we think about it, interacting with text, whether we voice to text or it's reading words back to us, that'll be slightly faster, but you're still dealing in the range of kilobytes to less than a megabyte in the minute range, right? This is a tiny amount of data. It's a tiny amount of data for the human brain to process as well. It's just that they're doing it through the auditory and the auditory complex and the speech recognition and the ability to read.
I think when Mark makes this argument here, what he's saying, and I agree with his argument here, what he's saying is that Google has a really, really strong data set to pull from, so that when they're training and when they're going to actually execute on an answer machine or a personal assistant or anything that's useful like that, even targeted advertising, they have the best overviewing 20,000 foot up lens on who Dougie is as a person, who Austin is as a person, and they have that data set available, and that's an advantage that they have.
Right. On your behaviors and what you do and what can be monetized via advertising. What I think these folks do not understand and have no appreciation for is that they are racing for monetization via advertising, like we're still using some model of embedded ads in web pages and adding blue links to searches to capture advertising that way. The whole experiment the whole AI thing will have failed if we're still stuck doing that. They've got to jack into the visual cortex of the human brain, which is why the form factor has to ultimately be glasses, so the AIs can show you things and not display text. Does that make sense?
It lowers your latency for sure, and it makes it more available for just like when you're holding a phone. If you need your AI to be like eyeballs and see what's happening and able to assist you as like a heads up display and be useful in that sort of an augmented reality way,
everybody will be walking around
it needs to be on at all times. But like if your phone's in your pocket, it can't do that. But the trade-off here, maybe there's some battery gains, maybe there's not, but this has a lot more battery space in it than just the lens of your eyeglasses. So people have become accustomed to your phone making it through the whole day on one charge. So they'll have to figure that out with the glasses. And we saw the Wi-Fi issues. I'm not sure if that was connectivity. Google I/O, they had some glasses that didn't do super hot either in their model.
Problems.
Yeah, so it's I think it's a few years out, but I think ultimately it is lower latency, and I think it does has some uses, but I'm not sure it becomes the dominant factor. It's not
the latency. It's as much as it is the latency is a thing for them to send you a message and then you think about it and then you type back on your phone. That's super high latency. But the real problem is the bandwidth. So the most powerful part of the human brain is the visual cortex. That's what processes all your vision. The visual cortex is so powerful and so flexible that we're running experiments with folks who are hearing impaired, and they can actually when there's brain damage to like the audio sensors, they can rewire things so that the visual cortex starts handling some of that processing power as well. We have our ability to process vision is significantly higher than anything else in our brains. And that's why. So when I talk about glasses, it's not about where they're mounting the cameras for the AI's situational awareness. It's where the AI is going to communicate directly with us. And so it's going to have to plug into our visual cortex one way or another. Probably, Neuralink is probably working on this in the background. But that's going to have to, if we just go to first principles, what is going to make people more effective than just a chat bot? It's going to have to be, they're going to have to jack into your brain, like Johnny Mnemonic or something.
Or just have some easy access to vision, right? I think Amazon and Google have both been attacking the angle of take a picture and basically we'll be able to codify everything that's within the picture, and they've done a decent job on that.
And then what can you display to me that is useful? The type of data you're displaying to me is not so much the link to, I mean, we've used the shopping for shoes thing before, right? It's not good. They're not. So don't tell me what type of shoe I need to buy. You're going to show me a picture for it. You're going to show me where it is in the store. Like, it's just going to be like a GPS that you follow the arrow to get to wherever you're going.
Well, so Home Depot has that. Every item at Home Depot, if you look it up online, it says on like what row and bay it's in, so you can easily find it. And even one better than that is Amazon. If you go on their app, you can just take a picture of the item and it will add that item to your cart. Like, it will know what you're taking a picture of. It's incredible.
So those are really good examples of like the nascent beginning of what we're going to be able to do. But the chat bots and who's worrying about LLM dominance and who's getting their advertising into the LLMs first, that is just stupid. We were chatting about this a little bit earlier, and it was like, these guys are they're arguing. We just invented the internal combustion engine, and they're arguing over like who is building out the most, I don't know, part that we don't even use in Model Ts anymore.
I don't think Mark's making that argument. I think he's just trying to critically assess the economic landscape within this advertising space and what could possibly be a really large new entrant, right? I think that's all it is.
So
I'll wrap up the clip here because it's only a few more seconds.
Play the video. Sorry, I probably got you way
reach out and use and consumers are only going to reach out, and businesses are only going to reach out and use so many large language models.
I'll be listening.
I'll be right back.
Where does Apple get left in all this then?
Okay, so he has it marked down as a convergence. He's got it marked down as a convergence of the LLMs. So, Dougie, did I lose you? Not sure where we went there. There was one other clip that I was going to show before Dougie joined here. I was going to save it for the end, but might as well jump into it. So I can't help myself with this one because something has to be said. Every once in a while, something has to be said. Joseph Carlson crushed Elizabeth Warren in the segment. Dougie, this is about to be your red meat here. I'm rolling it at the front here, because he just absolutely destroys her. And I'll just let the clip.
And instead, they were left in a financially desperate position competing with larger Chinese competitors.
Just to get into it, he's talking about the iRobot Amazon. iRobot is the maker of the Roomba, and they just went bankrupt. They were supposed to be acquired by Amazon, but that deal got blocked, and now iRobot is bankrupt.
Now we fast forward 3 years, and the Roomba maker, iRobot, files for bankruptcy, pursuing a manufacturer buyout. The manufacturer in this case of iRobots are, wouldn't you know, Chinese. So now the Chinese is actually owning the intellectual property of iRobot, when the company was previously American. It was an American company designing these robots. It was manufactured in China, but now China is going to own everything from the design to the manufacturing. The companies that are leading in this category today are the likes of Roborock, a fully Chinese company that's outcompeted iRobot and now is winning this race in the robot vacuum category. Even the companies like Dyson can't keep up. So effectively, the outcome of this blocked acquisition is that Amazon was robbed from an asset that they could have benefited from. Amazon could have infused iRobot with a lot of financial strength. They could have helped embolden the design team. They could have integrated it into some of their other products in their home category to make it more valuable. And today, many of the employees at iRobot could still be working there instead of being fired as they seek bankruptcy. At the same time, Amazon could have competed against Chinese rivals like Roborock. They could have had a product that was actually competitive against them. But now Chinese companies own almost the entire market of the robot vacuum segment. So in essence, what the FTC did, what European regulators did, and what the most vocal advocate of blocking these acquisitions did was enable foreign competitors over their American counterparts. They hurt American businesses. They took money directly away from American employees that created these companies that should have been rewarded with the sale to Amazon. And you might say that this was just a one-off blunder, that Elizabeth Warren, she made a mistake here, but this is just kind of like a one-off thing. It doesn't always happen.
Listen to this list that he puts together.
And that's just not the case. If you look at her history, Elizabeth Warren is almost inevitably against every single acquisition from one large company to a smaller one. Every single one. It doesn't even matter what the category is. Elizabeth Warren opposed JetBlue merging with Spirit Airlines over the same concern of anti-competitive behavior, which Spirit Airlines subsequently went into bankruptcy. Another two companies in the US trying to merge just to stay alive, and one of them goes bankrupt after the government blocks it. Elizabeth Warren vocally opposed the merger of Kroger and Albertsons, two retail chains trying to stay alive in the midst of competition from Costco, Amazon, and Walmart. And after those didn't go through, after it was blocked, her successful again, Albertsons is a mess. The sales are going down. They're closing locations. They've never been in a worse situation before. If they were able to combine, it would be lower prices for consumers, as scale equates to lower prices, exactly what Costco does. But now that they are unable to combine, now that the government got their way, consumers have higher prices and fewer locations to shop from. And if we look at some of the history again of the different acquisitions and mergers that she's opposed, it's so incredibly exhaustive. Again, it's almost every company that's ever wanted to combine. We can look at the Capital One and Discover. She's opposed. Vocally opposed to it. JetBlue, Spirit Airlines, Frontier Airlines, Netflix and Warner Brothers Discovery, no surprise there. Warner Media and Discovery, Microsoft and Activision, she was opposed to that. She was opposed to Amazon buying iRobot, Amazon buying One Medical, Amazon buying MGM, Amazon buying Whole Foods. She was vocally opposed to all of those. Many of them went through, but she was opposed. We also have T-Mobile and US Cellular. We have T-Mobile and Sprint. We also have the CVS and Aetna. She was opposed against that. CVS and Oak Street Health. We have Amgen and Horizon Therapeutics. We have Endeavor and Opiant, the pharmaceutical industry. We have Cardinal Health and GI Alliance. We have Cardinal Health and Integrated Oncology. We have Sander Farm and Wayne Farms. Senator Warren was against those as well. We have ExxonMobil and Pioneer Natural Resources, two energy companies. She was opposed against that. We have Facebook and Instagram, Facebook and WhatsApp. Elizabeth Warren is actually calling for retroactive unwinds of those companies. So since she wasn't opposed to it at the beginning, she's opposed to it now and wants them to be broken up. She also wants to break up Google and Waze. She wants to break up Google and DoubleClick. She wants to break up Google and Nest. So you can't have your home, your Nest home integrated with your Google system. And the list goes on and on and on.
Isn't she just an unserious person?
No, she's deadly serious. But she understands that if capitalism works, she's out of a job. So must stop capitalism at every possible opportunity.
I don't know. I'm not sure that's how it works. Or I'm not sure that's how it can work.
Because every business that can't M&A to stay in business ends up going bankrupt and results in higher prices and less choice for the consumers. So you can't tell me you're for the consumer and be against every business working to become more competitive.
Right. So we just sort of jumped in hot here. We've actually got a fully packed schedule here that we will try and make it a good full episode here. I am a little bit curious what Derek did. And, you know, he even used the word limitless. Did you ever see that movie?
I did. That
Yeah,
was
that was a
long
trip.
time ago, but it was good.
Yeah, it was basically like he was doing Adderall, essentially. He was like God to your brain when he took this drug and was
Right.
just like, yeah, he was the top Chad for a minute, but then it had side effects. I'm not going to spoil the movie. It's a good one. Go watch it. First
They
one
made
we
a
got,
TV show on it too.
huh?
They made like 2 or 3 seasons of TV on it as well.
Oh, I didn't know that.
Yep.
Very cool. The first thing that we had on here was Dan Ives and Waymo. Do we want to save that for the end when we go over some of like the modeling, or did you want to do all of the Tesla and Waymo stuff up front?
Sure, we can throw it all on the end. I just knew that would be some red meat for you to chew on, especially.
Okay.
So, yeah, we can roll that back to the back.
Yeah, we can roll out to the back for sure. So then, you wanted to talk about Tom Lee and some of his like more recent comments, right?
Right. So these all feel ancient now. You know, gosh, like 4 days is such a long time. But yeah, so Tom Lee came out on television and said we're gonna go down 20% next year and then go up. I have a lot of respect for him because he has had the courage and the conviction to remain bullish and keep pushing, not pushing, but just staying the course on the vision that he has for markets and how they're going to work, and even just to say, you know, these are temporary hiccups. We're getting long term. We're still all good, all green. Stay the course, right? But now he's saying we're going to go down 20%. I don't know if the market participants are going to be satisfied with a ride down 20% in their portfolios on the theory that we might be up 40%. He's starting to sound a little too bullish, especially on his crypto calls. Like, what, he's still calling for Bitcoin 200,000 by like end of year. That seems to be.
Has he his ETH target? Because it was what, 8,000?
Yeah. I'm gonna get out of the way here. Here's the new Bitcoin chart. That's gonna be my background now for every Wednesday. So I'm gonna keep my indicators and my lines on there. If I add one, we can talk about it. But anyway, you can see that my charting is like, I'm really good at identifying the levels, what they're gonna do when we get there. I'm never sure.
Well, what's your x-axis here? How many months are we looking at on these candles?
Oh, this is a daily chart.
Okay.
Yeah, Jambeck, I think he did move his target out to next year.
Is that S&P target or ETH?
For BTC, I mean, he's still saying 200K is his target.
Got it.
Which there's a lot of people saying the crypto winter is dead. One of them is not Matt Money, and he might be right. So it'll be interesting to see it play out. I'll be updating charts and adding new trends as I see them, but I want to leave the old ones where they're at, so we can figure out, as a group, what the price actions, historically have looked like, and we can kind of source the, find the supports and resistance. So like I said, I feel like I'm good at finding levels and inflection points. I just don't know what's going to happen when we get there. Does that make sense?
Yeah. Now, I have a theory for why I think he would say something like this, because it's kind of a weird call to make, right? Like, why are you bullish on the overall market, but you think there's going to be a 20% drop? Doesn't really make sense. So I think the theory goes as follows, that you have Jerome Powell, who's not going to be out of office until May. And I think we might have just gotten our last cut until a new Fed chair, because it's really, really clear now at this point that we are definitely going to be getting a Fed chair who is going to be cutting at the president's request. Like, there's no dancing around that. So, I mean, how else would this call make sense? Does my idea make sense here, Doug?
Yeah. I just don't think, or I don't see how the market is going to put up with a 20% drawdown and be ready to buy the dip after that.
I know what I would be doing.
Wrong, but these last few weeks, I guess since October, have felt worse than it felt worse than Liberation Day.
One of the other things, I was listening to Gavin Baker.
You made some fantastic trades along the way, so you're probably not hurting as much as some of us.
Yeah, I'm not hurting that bad. I've managed it pretty well, luckily, other than SoFi, which, of course, I think everyone's getting hit on SoFi a little bit. But I was listening to Gavin Baker, and he was talking about the ramp time for Blackwell in terms of like the time it takes to actually manufacture it all, distribute it, do pre-training and training, and then actually put all that compute into production. Yeah. And he was mentioning that you have almost this productivity air pocket where you actually don't see any gains for, a cycle essentially until you actually get that next product online. So I think maybe that's the other thing that might be playing into this. And everyone saw, OpenAI's new model, not very good, just to be frank. It wasn't any massive improvement on anything they have. Their browser wasn't very good. We've all seen the mass exodus, the brain drain that they've had, and now they're raising $100 billion of cash. I really do think it's important for them to, start generating revenue, because all the AI backlogs are getting so big that I think it's the market's starting to get a little bit freaked out to a certain extent about that, almost the too big to fail risk that OpenAI could present. I don't believe that they're too big to fail or anything. I think, the models are commodities largely. But I do worry that, if a lot of companies are dependent upon them actually paying their bills, and that becomes like a domino that can fall, you don't want that situation either. So I do think $100 billion is a really long runway. I think it's time for them to figure it out.
Yeah. Well, it's clear one thing that they did not account for, and that was the power generation and transmission, frankly, problem, which I have a little further down in our docket here. Yeah, that's true. Blackwell isn't even in use right now, and NVIDIA ain't stopping either. They've got another product that they've got a 2-year cycle, so they're about to have another product come out. I gave you this analogy earlier. Essentially, we've invented the internal combustion engine 3 years ago, and people want to be short the markets because we don't have a fully built out interstate highway system with fuel refineries and gasoline distribution.
Well, okay, so to that point,
it's so far beginning, and then particularly in OpenAI's case, remember they started as a nonprofit, so having a business plan was not part of it. Right, it was nonprofit. It was research, and so it was a research nonprofit. Now we're familiar with having research nonprofits. They're usually called universities, where they can raise money from donors and alumni and dump huge amounts into research that don't have to have any practical application. If you look at, the physics and the quantum physics research of the early 1900s, there was no practical application for any of that stuff. I mean, we even knew what electricity was from Benjamin Franklin in the 1700s. But after we discovered the electron, we didn't know what to do with it. It was just there. It was an electrosensitive particle. what people did with electricity before that is there were almost like magic shows, and they would go around, and show electricity and make people's hair stand up and blah blah blah. That was electricity. It was like a mentalism, right? They were just doing magic shows with it. There was no real work, no real anything done until Thomas Edison. So we've got to get past the research phase on AI and get to the point where engineers act, and I don't mean software engineers, I mean like actual engineers can start actually building things with these generative AIs. But I don't think LLMs are the stopping point where we're going to stop and collect a whole bunch of revenue. If you're counting on that, I think you're really short-sighted.
Yeah, of course. You have to build it all out, before you can actually monetize it. But at the same time, you don't want the bet to be so big that you're risking existential crisis if it doesn't all play out. Like,
yeah, for sure.
Yeah. So I mean, it's striking a balance.
Henry Ford built Ford Motor Corporation and invented the assembly line long before Dwight Eisenhower ever went to Germany and saw the interstate system and then coveted that. So if you think about just how much commerce takes place over the interstate highways, we take that for granted that it didn't exist before the 60s. It didn't exist at all. It was like the state highway system, not the interstate highways.
Now,
I also agree with Alex Karp that all the LLMs are going to be commoditized anyway. So I really am not interested in investing in. I actually got, I know you broke the news on and I'm going to violate a confidentiality thing here that I do not care about at all, because I don't remember signing anything like that.
Hey, it's your deal. It's your deal.
I guess the way I'll avoid it is I won't tell you the source on it. How does that sound? I'll just tell you what the news is. How's that sound?
Sounds good.
But this is Anthropic, and they are seeking, as of this evening, they are seeking to raise at $387 billion.
How much?
Their implied valuation is they're raising $13 billion.
13.
Okay, hang on. In September they raised 13 at 183. Now they're raising at 387.
Which makes sense because they're actually generating lots of revenue and ramping it fast.
I don't know if they doubled, more than doubled since September.
The revenue? Oh, their revenue is growing like a weed.
Oh yeah, but I don't know if their valuation should have doubled in 3 months.
Time will tell. At some point they're going to go public, and we'll get to see their income statement, right?
Yeah. Last month, Microsoft and Nvidia bought in at 350. So now they're offering it to, or I guess after the regular accredited investors can get in now at 387 at this opportunity.
Now, in the midst of all of this AI drama, here you've got yet another brilliant politician here who is just
anti-capitalist politician,
flaying out against data centers and AI. Apparently, we should live in the dark ages. I don't think he understands that he used a data center to make this tweet.
He's not against it, Austin. He's just against whatever DJT is doing. If DJT says the sky's blue, this guy's here to argue it.
Yeah, the frustrating part is that there's going to be Luddites who actually agree with this, who want us to put our foot on the brake and slow down human advancement.
A lot of them voted for Republicans in the last election too, and they're just crazy populists.
Thank you, Jambeck. Thank you. Yep. Smooth transition. Dougie, take it away.
All right, folks. I actually have quite a few notes on this, so bear with me, Austin. Please interrupt and ask questions along the way. All right.
You got it.
So I made a lot of notes on this, but they're just kind of stream of consciousness, so I'll just cover it as best I can. How would space-based data centers work, and why are they a good idea, and what do the people who say it's nonsense, why are they, what is their point? Are they right? Are they wrong? Let's examine this. Okay, I am an inspector who got a management degree, and they call me, and I have an engineer as a title, and I read some science books. That's my qualifications. All right. Yeah, ISS space station plus radiations equals easy money. Yeah, we've been running data centers in space for a while. They're called spaceships. But anyway, so let's just start with, why would we want data centers in space? Well, first of all, you have unlimited free power from the sun. It is literally a fusion nuclear reactor operating at the most peak efficiency ever. No one has to operate it for you. It is on 24/7, and all you have to do is point your solar panels at it. Furthermore, it is unregulated power, meaning that you don't have to ask to build anymore. You don't have to deal with regulators to get different, to break ground. You don't have to do any environmental studies. You can just send more stuff up and put it in orbit. It doesn't even have to be orbit around. Sorry?
You don't have to lobby the local population and try and promise them that their electricity prices aren't going to go up and that they're going to take your water supply, any of that crap.
Yep. There's no real estate acquisition. There's no lawyers you're paying for your real estate acquisition. There's no property tax you're paying on anything up there. All right, it's just unregulated. You can get as much as you want. You don't even have to design your system. Your electrical engineers can design something that doesn't even work on the domestic grid. Meaning, if you want DC power the whole time, you can have DC power. You do not have to operate at unrectified alternating current at 60 hertz. You can operate it on whatever you want to build in whatever electrical you want. Like, it's just telling your electrical engineers, go back to first principles and design this thing from zero. You do not have to base any assumptions.
Now, some of the advantages that I had heard was a few. So you have 24/7 solar, of course, but you also don't have the atmosphere. So you're getting more direct solar. The estimates that I heard were about 30% more energy. And then the third item has to do with cooling, because you're in space. The cooling is obviously much, much better because in space it's near zero.
So, okay, let's pause there. Let's pause there. On the cooling, okay? As you mentioned, we're not in atmosphere. So you do get better electrical conversion. You can also, by the way, move your data centers closer to the sun so they get even more power. They don't have to stay in Earth orbit. Okay, but on the cooling situation, that was the thing that initially attracted me to the thing. I was like, oh yeah, well, you have space. You don't have to deal with water. You don't have to. Most of the power, by the way, is not to run the processors. It's to run the air conditioning and the cooling systems. So if you have the freezing cold of space operating in the shade, operating at near 0 Kelvin, why would you not do that? Well, the way heat moves around is based on three things: conduction, convection, radiation. Conduction is like when you touch something hot to something cold, the heat is going to move into that thing. Like if you put your pan on the burner on an electric stove and the heat moves into the pot or the pan, that's convection or conduction. Convection is the heat transferring between different materials and gases, right? So if you walk into a room where the heat is on versus a room that doesn't have it, the heat is going to move across across those different substances. And then finally is radiation. And this is this also dovetails in with global warming. So the way you keep something temperature stable in space is you have to emit via infrared radiation, long wavelength infrared radiation. You have to emit that at the same amount that you absorb it on the sun side. Does that make sense? So on the dark side, you're literally emitting infrared radiation, which can be seen on like night vision stuff. You would still be able to see the dark side of the Earth, for example, on with night vision because it is emitting infrared radiation. So that is not as that takes a lot of that takes a long time. Radiation takes a long time to work, and we don't have any convection out there with like atmosphere or water to kind of pull that heat out of whatever on the dark side where we want to have our cooling interface. So that means we have to build radiators. And that means, so we need more surface area, so we need to build more radiators. That's something we do already. We do it on every piece of spacecraft that we send up. If you look at pictures of the International Space Station, you can see they have the solar panels on the side, and then they have these other things that look like helicopter blades. Those are the radiators. And just like the radiator in your car, there's just a whole bunch of small, thin metal, and it increases the surface area. So it allows the heat to be dissipated. If you're concerned about the heat buildup in your data center, you're just going to need larger radiators. Fortunately, as we get better and better at building small things, you can add a lot of surface area in small volumes with light materials. These are ideal for, these are ideal for being launched into space.
Yeah, it's really interesting stuff.
We'll cover more on that later. Sorry, I want to get through everything here. Okay, so like I said, we have zero taxes on power produced. You probably know this when you look at your power bill. You pay taxes on the power consumption that you use. You'll pay no taxes on power that you generate with your solar panels in space. There'll be no consumption tax, real estate. I think we covered all that.
And it's a closed loop,
Yep, and it's a closed loop. One thing I don't think I had on this. Okay, so eventually you will get very low latency, and we know this because of companies like SpaceX and ASTS that are moving the data transfer to space. So rather than send data through optical wires, through glass on the surface of the Earth, where you have to dig and lay fiber and all that stuff, it's much easier, as we've seen with Starlink. They can just drop it and it works, right? If you build your data center in space, that's where you're beaming the data anyway. So you get to you get to intercept and process the data in space cheaper, and you get to return it back to wherever it goes. So you've cut out half the loop, thus reducing overall latency.
Yeah. So if you can get it all up there, and there's a cost to that, there's an economic cost to getting it all up there and making that happen, and the engineering technical difficulty. But that's where you want it for, the last 15 minutes of reasoning that we just gave, that if you can get it all up there. But here's the question. Jan Beck says, how long do you think it will be until we actually get one of those up there? I think, they might build out all the satellite networks first, and then, experiment with, one or two of these at a time and do a proof of concept before they really start.
They could put a whole bunch of, they could put a whole bunch of stuff in a Dragon capsule and do it tomorrow. Like take some old GPUs you're not using anymore, put them in a Dragon capsule, send it up there. Done. I mean, at what level, at what point is the space-based data center gonna outpace that of the terrestrial ones? Well, it might depend on what you're doing as well, right? So if you're doing complex engineering tasks on the moon or in orbit, then having your data processing there is going to help as well. Also, the further as we go to Mars, the latency to Earth is like 14 minutes. So you definitely are going to benefit from having the data centers operating. This is the easiest one. When you go to Mars and you want to send Tesla robots, they're going to need a data center, and you don't want that to have a 14-minute latency.
Right.
So just park it in orbit.
Now, there's also an input component to this that you mark down, which is the grid and power transmission and the problems that can create, not only just from like the limited real estate that you have on the surface of Earth that we actually want to use. Like land is expensive, property tax, we understand that, but it's also just a cost to society just to have like a random building that doesn't really serve any function other than this. If you can, reclaim that land, and you've also got the fact that it is clean. Yeah, you're using the water, and you've got the tax on the grid. So, did you want to talk about how this is going to play into that? Obviously, it bypasses all of that.
Yep. Well, that's a great point. That's kind of not the note that I had intended to make in the doc here. But yeah, so if we can have data centers without having geographic footprint, without water usage, without power usage, hey, we can do better things with water, like grow crops. Okay, like the food has to come from somewhere. Yeah, there's going to be a lot of picks and shovels plays there, I think, related to this. But here's the one I was actually thinking about. So we've seen like GE Vernova kind of take off lately because they make natural gas turbines, and other we've seen a bunch of like a new nuclear renaissance, SMR renaissance. Look, I love nuclear. I know a lot about it. My dad was a nuclear engineer. I grew up as being the only kid in the 80s and 90s who thought nuclear was awesome. Everybody else thought it was dangerous and going to kill us all. So I've loved nuclear since before any of you even knew what it was. That said,
are you giving off hipster energy about nuclear energy?
A lot of these new companies are stupid. They're just stupid. And I don't have any other way to say it.
Come on, Dougie. We know you love Oklo.
SMR concepts have existed since I worked for McDermott and Babcock and Wilcox. They released their project in 2012. So SMRs aren't new. I don't know why all of a sudden they're getting a lot of play, because they're still decades from being approved, probably. That's true. The Renaissance was kicking out, and then we got Fukushima, but that wasn't an SMR's problem. But the highlight I had here on our doc, Austin, was I wanted to talk about the thing that no one is. You can build all the nuclear power you want at Vogtle, or build all the AP1000s, or even build SMRs wherever you want, but you still have to move the power from where you generate it to where you use it. Who is doing that work? What companies are building power transmission? Who's building the transformers? Who's building literally the cable? So that's some companies that I put up here that I thought we might want to take a look at.
Did you want to name any of these, or?
Yeah, they're ones I'm definitely going to be showing, or they're going to be definitely on my homework list this holiday season when I'm not working. So large electrical transformers are going to be built by Hitachi, Siemens, GE Grid Solutions, Hyundai Electric are some ones to start looking at. Some of those service Japan, some of those service South Korea, some of those service Europe, and some of those are United States domestic. There's also TBEA, which services China. And those are the transformers. So who makes the power cables? Manufacturers like Prisman Group, Nexans, South. These are companies I've never heard of before. So a lot of work to do. This actually feels like a June, a Junie play to me. Like she's been on like the metals and stuff since for a long time, and this feels like it will jump on, and I'll still be doing DD on it a year from now, and she'll look like 3x'd on it. Some of these companies are Prisman Group, Prysmian, Nexans, Southwire, Sumitomo Electric, North American companies, Encore Wire, and then there's some specialized providers like LX Cable, Top Cable. So these are all companies like I have not heard anybody talk about these. Have you?
No, this is not my space. About as far as I'll go with it is I've got Comfort Systems USA, and a large part that they do HVAC work, they do building of modular homes, and they do large scale construction for office buildings, government buildings, schools, courts, but also data center, and that's they're fastest growing and quickly becoming a large part of their business. And they do a lot of the electrical work as well too. So not only are they on the cooling side of things, but they're also one of the biggest employers of certified electricians around the country, which is an ever increasing value add as that shortage gets more and more dire. And so they're doing a lot of the install. So when a data center job comes up, they're doing a lot of the work actually installing the lines and making that happen. So they're probably a customer of one of these companies that we're looking at here. But yeah, these are all industrials that I'm not super familiar with other than GE.
Yeah. I mean, so these, like a lot of these companies I've never heard of before. And the grid, we've been talking about refreshing the grid for decades. Well, maybe the last decade, and no one's done it. But I mean, I think we're seeing there's enough money that's going to be pushing to get it done that maybe it'll finally happen. But all the money just can't go to OpenAI. It's got to filter down. Like you'll know the build out is real when CoreWeave and Nebius are not the ones getting the big run ups. They're not the ones seeing all the revenue. It'll be these companies because these are the ones with the revenue has to finally make it through. It finally has to make it down to the electricians and get in their pockets and the executives of all the companies downstream of the big plays. Otherwise, that's how you know it's fake.
And speaking of things being fake or not being fake, the next one you had here was, you wanted to talk a little bit about the AI quote unquote bubble. I have my feelings on this, but I'll let you kick it off here. Talking about, some of the drawdowns on some of the good earnings, maybe after Broadcom and Micron and some of the companies that just recently reported. I'm not sure how you want to chop that up. It was some wins, some losses.
I'll just say I've seen bubbles, y'all, and bubbles don't have 10, 20% drawdowns on companies that have some of the best quarters in history. When you're in a bubble, the narrative is all that matters. And you can't tell me that the narrative on NVIDIA and Palantir and Robinhood and Broadcom and Oracle, like these are all fantastic. Yeah, send him the link.
Yeah,
these have all been amazing earnings quarters, and the market has just shrugged it off and be like, nah, we're selling. So that doesn't happen in a bubble. Sure, it happens after a bubble pops. So we're not in a bubble. One way or another, either we're not in a bubble or it already popped. Look behind you. But I don't think either of those are the case. We have a lot of room left. Like I said, we're still in the nascent early development stage on what this AI stuff is going to do anyway. Like, because we ain't finishing with just putting ads on chatbots. That's not, put ads on the chatbots and call it done. That ain't it.
Well, I really liked your analogy that you used earlier with the cars. Can you do that one more? Do that analogy one more time for the folks who missed it the first time around.
So we basically invented the internal combustion engine 3 years ago, and everybody who's shorting the market this week and selling off and panicking and talking about valuations and so. They're doing that because they're saying, oh, we're not seeing any returns. Well, you're trying to look so forward to say we haven't seen the interstate highway system yet. We haven't seen a fully fleshed out fuel refinery and distribution network where we can get fuel, where we have giant complexes that refine the fuels, and then we load it into pipelines and trucks and deliver it down to just about every corner store in America at every exit along the highway. Like, I mean, that infrastructure alone is, that took decades and decades and decades. It took half a century, if not more, to totally build that out. And people are ready to sell off AI and call it a bust because the infrastructure isn't there yet. And
right.
Then, like, we still haven't built. We're arguing about where to build the power and who's going to build the electricity for it now. Like, we're so at the beginning of this.
That's really far upstream. Is your point to that? That's at the front end of the production cycle.
Yeah. Like we're still trying to figure out what to go back to the electricity analogy. Like, we're still trying to decide whether or not we're going to use direct current or alternating current. Like, nothing has been decided yet. Nothing is permanent, and that's why I really have no patience for people that are arguing about. I have patience for the people. I have no patience for the arguments about, whether or not this is monetizable yet.
Right. The value unlock is going to be there. And one thing that I'd like to point people to is if you look at the internet wave, that took multiple decades for the internet and software to actually begin stacking on top of each other, useful thing on top of useful thing on top of useful thing, until finally you had Amazon, YouTube, eBay, PayPal. Like, it took a while for all those things to actually come to fruition. And then you ended up, with giant software companies like Microsoft and Salesforce, IBM, who unlocked even more value for companies. And then that spreads out the breadth of the rally when you get all of the other 493 companies now using the technology from the ones creating the value up at the top. So, people are looking at what the product is today and they're saying, well, this thing is just like a silly chatbot, or like it makes useless AI slop. And they're not actually picturing and maybe even using a little bit of imagination as far as what products are going to be built 5 years from now and 10 years from now that require multiple steps to get there before all of the values unlocked. We're just at like the very early stages here of actually unlocking that value, because there's a lot of things that need to be built out along the way.
Yeah. Now I'm gonna I don't know all who's in the chat, but I know June is probably the only person as old as me, and so she might be the only one to know this. June, the AI slop everybody is talking about is probably what, like, GeoCities. Do you know what I'm talking about?
No, explain it for the people who don't have gray hair.
Okay, so GeoCities was a concept that everybody would have their own web page. And so you could go to GeoCities, and you'd have like geocities.com/ and then whatever your username would be, right? So If you think about, like, everybody kind of has their Facebook page now, and they kind of got rid of those. But for a while, everybody had you could have your own free web page hosted by GeoCities. Okay, KK Bionic knows it. All right. So most of those sites were absolutely useless. Yeah, you had to make a web page to graduate, meaning you had to, like, literally code the HTML yourself. Like,
Now, I remember doing some of that with MySpace.
Table, row. Yeah, this is like MySpace had all automated a whole bunch of that stuff.
Yeah, they did.
You were making the site yourself. You weren't. Yeah. So Dreamweaver, but Dreamweaver, that was still like 5 years after, like, GeoCity. GeoCity was on its way out by then. But yeah, they had Microsoft Front Page was the WYSIWYG.
And you had made a note that, is the AI data center trade over? Because you had names like IREN, Nebius, CoreWeave sort of get smacked around a little bit. Even, Oracle has taken quite a spill. And you used the term like ADHD investing. Like, what's going on with the TikTok generation? Are people really getting that bored with a theme within, 6 to 9 months where they can't even make it, 8 earnings calls before they get bored with a name?
Yep. You got TikTok investors now, like, because look, it takes a long time. If you're not Elon Musk, it takes a long time to build a data center. It takes a long time to build a data center. But just to acquire and stage all the equipment, let alone physically do the work, doing the welding and bending the steel, like, that is just not something that's going to happen in 2 quarters. So I'm going to be curious to see how we get to follow the revenue on these companies that are, I guess, like Nebius and CoreWeave are designing the data centers, and they're going to help construct them, but they're not going to be the ones actually bending the metal. Now, IREN and, like, so some of the Bitcoin miners, as Amit calls them, the failed Bitcoin miners, they already have facilities. Like, they already have all this stuff piped up. They just got to swap out their ASICs for GPUs, or maybe they keep doing ASICs and use TPUs.
They do have them, but my understanding is that the capacity is mostly going to be coming online in the future rather than from existing facilities in terms of percentage of power that they actually have available to do that swapping. So like IREN, for example, I think it's something like 80% plus of their, their future data center would be infrastructure is actually to be built in Texas rather than the existing facilities that they have right now in Canada.
Yeah.
I think Dan Ives even mentioned a stat that there's more data centers that are under construction now than even exist. So, yep. Yeah.
It's something like, I think it's like 4 times more are under construction than exists. It's a multiple. So, we'll see. Are they going to, and this is not internet where they built a bunch of dark fiber. All this capacity is already spoken for. During the internet build out, they were just laying fiber between 2 places. They didn't have any customers for it. Now, all these data centers, they've already have customers for everything that they're building. But I feel like I've ranted. I've gone between Bill Nye the Science Guy and the rant dude enough here. I've been the queen of quinoa and the emperor.
Well, if you want, I can tee up Netflix here because I think that's maybe more of the red meat right now.
Well, that's a little your play. You're in on Netflix now. You're the
I'm
one.
in.
Why don't you talk about it?
Yeah. So, Netflix is being mispresented to a lot of people. I'm seeing lots of things online that just aren't accurate. So just to clear up a few things. Back in June, Netflix started negotiating with Warner Brothers, and Warner Brothers was having like an open negotiation with a lot of companies. And Warner Brothers looked at everybody's offers multiple times. There were board members that came out today reaffirming all of this, and they said that they gave all the parties a fair shot at this deal. So back in June, Warner Brothers decided that they were going to split the Discovery business with CNN and Turner Media, which is TBS and TNT, along with the Discovery Channel. All of that was going to be a separate business that would be standalone after Netflix acquires them. So Netflix signs this deal about a few weeks ago, saying that they were going to acquire the rest of the business, which is Warner Brothers Studio, HBO, etc. And you'd have this separate business that got spun off. The deal is for $27.75 of cash for Warner Brothers shareholders. If the deal does not go through for regulatory reasons, Netflix has to pay a little over $5 billion to Warner Brothers. If Warner Brothers decides to take another suitor after this deal got signed, they have to pay Netflix $2.8 billion. Paramount is under negotiation, or they were trying to negotiate with Warner Brothers by leveraging the Ellison Family Trust. Larry Ellison, one of the richest people in the world, although his stock is quickly going down. But they were going on TV, David Ellison was, who is the CEO of Paramount Skydance, saying that the $30 an offer tender offer through a hostile takeover was a better offer than the Netflix deal. Paramount Skydance, their offer was for the whole company. So you are comparing apples to oranges here when you are talking about the exclusion of Turner Media and Discovery in one offer versus the other. He also said on television that this would be anti-competitive if Netflix got the bid. Again, I said it last week, I'll say it again. If Paramount Skydance ends up buying Warner Brothers Discovery, they will have a larger market share than the would-be combined Netflix and Warner Brothers. The second thing to that monopoly argument is that Netflix doesn't even have 20% market share. Even under this deal, they would only have 13% market share because you have to include YouTube, Instagram, TikTok, Disney, Hulu, Paramount, Fox. The list goes on and on and on. Amazon Prime Video. So you also have to consider to the industry that if Paramount, who has a movie studio, and Netflix, who does not, if they were to acquire Warner Brothers Studio, one of those companies is much more likely to only retain one studio, and the other company is much more likely to say, great, we have a studio now. Let's push out as much content as we can. The gaslighting that David Ellison did on CNBC, it was unreal. That's what I have to say about that. And then watching the All In coverage, they basically echoed everything that David Ellison said, which, usually there's a lot more fact checking going on either from the Sachs end or from the Calacanis end. Usually there's pushback in one way or another. I'm just shocked that nobody mentioned these very important details to the deal, and that they sort of just bought the main headline at face value.
I remember hearing that and thinking Austin's eyeballs are melting as he's hearing this part of the podcast, because you had made that point so great about it's basically just from market share standpoint, they'll basically be equal.
Yes. Now, since last week, we've had some updates here. Warner Brothers Discovery basically came out and said we are going to stick with Netflix's offer because Paramount Skydance, when they were making the bid, they couldn't make up their mind whether or not they were going to use the Ellison Family Trust for collateral. They had to go out and get debt to even make this $30 offer. So they're getting debt from Citi, they're getting debt from Apollo, and Bank of America. So 3 different banks.
But if I'm selling, I don't care where they're getting their. As long as they've got their financing, I kind of don't care where it comes from.
Well, the reason it matters is there's 2 reasons. A, that Ellison Family Trust not guaranteeing that backstop for financing makes the deal less attractive for Warner Brothers shareholders. They want the deal to go through, and they want to make sure that it happens. Secondly, if you were to merge Paramount with Warner Brothers, 2 companies that have a lot of debt, you would end up with a really high level of debt to EBITDA, whereas Netflix is cash heavy or cash flow strong, and they have a decent amount of cash on their balance sheet, so they can stomach the debt that Warner Brothers has. So for a few different reasons, it actually does make sense for Warner Brothers to stick with Netflix, and that's who they've already signed the deal with. So at this point, you have a poly market sort of V-shaped move, where last week we were looking at 30 to 40% likely that Netflix was going to end up taking down the deal. Now it's jumped up to close to 80%. So it's looking really, really likely, like it's Netflix's race to lose.
Yeah, I think that was always the case. That being said, though, like a hostile takeover is still a hostile takeover. And so it kind of doesn't matter what, at least in my understanding of business, and this is a whole other level.
Well, their deal would have to be better, right?
Yeah. Well, no, they can just buy up all the stock and then can get a board seat and control the company. Like, no, they don't have to. That's the definition of hostile takeover is, we're just buying up all the company and then we decide what happens. So that it doesn't matter if they're going to do a hostile takeover, then they've got to find someplace to sell the shares or someplace to buy all the shares. And if they can't buy them at 30 or whatever their offer is, then they got to find somebody to sell it to them at a discount. And I don't think anyone's going to do that. So it kind of doesn't matter what Warner Brothers says, which deal they're going to abide by. If there's a hostile takeover, then someone else will be running the company and making the decision on who gets to buy them. Does that?
Yeah, I think in a horse race, like one company, or I should say one party, has lots of free cash flow and a healthy balance sheet, and the other party is getting cold feet about whether or not they want to use their trust money from Oracle.
Well, yeah, but that ain't done yet.
It's not done yet. No,
is Jared and his boys from.
So Kushner withdrew.
Kushner withdrew. Okay, I hadn't heard.
Jared Kushner withdrew. Yeah, that was the last piece of key information I had for you was that Jared Kushner withdrew his support from the hostile takeover effort. Now, David Ellison's still going to go forward with it, and he's still trying to make his case publicly, but it's getting really hard because all of his arguments are weak and his offer sucks.
Yeah, well, I mean, you got to tap Daddy's piggy bank, and Daddy's piggy bank took a hit this week.
It did.
For no real, but is that just somebody play? Is that like Soros playing 4D chess? Like to keep Ellison from getting a hold of CNN?
I'm not sure. I mean, Ellison, if he wanted to, he could buy CNN later, right? So Netflix takes Warner Brothers HBO and the studio, and then when the deal closes, Discovery and CNN and Turner Media, that's all going to be its own company trading under its own ticker. Like Ellison's can go buy that later if they want CNN.
Yeah. It's just insane to me that here we are back again with tech giants fighting over Warner Brothers. This is not the first time it's happened. You know what I mean? Like, it became AOL Time Warner. It was all owned by Ted Turner.
Well, there was some other Netflix news too, which was a lot of podcasts in video format are going to be coming to Netflix. So they made a deal with iHeartMedia and Barstool Sports. So a lot of those podcasts, like The Breakfast Club, Charlemagne the God, and what's his name from Barstool?
Are they getting Megyn Kelly or Yeah, just Barstool, whatever.
I think Megan Kelly might be on there.
Network or just Dave Portnoy.
I think it's all of Barstool here. And I think I did hear Megan Kelly as well. Let's see. The current lineup: Bobby Bones, Joe and Jada, My Favorite Murder, Dear Chelsea, This Is Important, Stuff You Missed in History Class, Barry Bones, The Psychology of Your 20s, Pardon My Take.
Okay, that's Barstool.
Okay, Spittin' Chicklets, The Ryan Russillo Show. So that's just what they've announced so far. So it seems like Netflix is really making an effort at this and trying their hand.
So that's not Megan though. That's I don't see her going to work for Netflix. I don't see her wanting to be going to work for anyone else. So does this mean they're going to pull all this content off of?
Yeah,
YouTube?
this is all going to be exclusive now. Mm-hmm. Just like the Spotify deals that they did a few years back when they signed Rogan.
Yeah. Well, look how well that worked out for them.
It worked out well for Spotify.
It worked out so well that Rogan got to put his show back on YouTube again.
Yeah, but it got Spotify to a lot of users and built their advertising base. Like it kickstarted it. Because remember, they were having a hard time making money before that. And they spent a little bit of money to show everybody, hey, we know how to do advertisements.
And they should have a hard time doing it because Google should be eating their lunch. And I don't know why it's not.
Apple Music has actually picked up a pretty sizable chunk, but I think YouTube is still the #2 music app in the world.
But I mean, literally YouTube Music. I showed you that email I got. It was an email I got from YouTube Music saying you can port your, or it might have been a notification, but it was like you can easily import your playlists. And I'm just like, what are you guys doing letting Spotify exist? I mean,
yeah, I tell you, I use just regular YouTube. I don't even use YouTube Music because the app is kind of clunky and it doesn't have all the features on it that YouTube does. So I make my own playlist in regular YouTube and I just use that with premium.
You do get better sound on YouTube Music. You do get much higher fidelity. But still, but this is one of those things where it's like, okay, let's go. Google, waiting on you. Act like you're in a fight.
Hey, they can't win in every market, can they?
Well, they could at least act like they're fighting and not ignore their product. Okay, so
did you want to get into some charts here?
Well, we're running a little. I feel like we're running a little long. If we could throw that on the end, maybe if we want to.
Okay. We can quickly run through the stock draft here, just see where we're at. Do a little numbers check here.
I doubt it's very good for me because VG has continued to get smoked.
Let's see. Is this current here?
I am not. I was holding as third place for most of the year, but I've just been getting smoked lately.
Okay. Oh, you fell off. Oh no, where'd you go?
I've fallen below ChatGPT.
Oh, there you are.
Yeah.
So you're still 25%. That's not bad.
Yeah, that's not bad. But Rocket Lab got smoked this week or in the last 2 days.
It did.
And VG is I don't know if it's probably down from 25 to 6. And then Hood had a bad week and SoFi had a bad week.
It sure did. Had a bad
week. The only thing green in my portfolio all week has been JP Morgan.
Yeah.
But
these space names took a hit
here.
I sold all my Rocket Lab at 63 the other day at the top. That was one of the things that I kind of got some lucky timing on. We talked earlier about data center and space, and I think that's just way further away than people were giving it credit for. I usually try not to make a habit out of trading my positions like that, but it went from 35 up to 63 in 2 weeks, and I just didn't feel it was justified. And literally within an hour of me selling it, it took a nosedive. It was the wildest thing.
Yeah. Well, it was holding up better than all the other high beta names until today, or I guess yesterday, and then today it just gave up the ghost. But I mean, I have a feeling it'll be one of the ones that comes back quickest as well.
Well, another stock that really had a
they're just executing too well.
Yeah, they've done a great job, and we've actually got a launch here in 48 minutes. So we'll throw to Matt at that point. One of the other companies that really took a U-turn for the day was Shopify. It was up to 170, and then it just slid down all day and eventually closed down at 161 red. So that was interesting. Same thing with Amazon. Amazon started up green for the day because of the OpenAI investment news, and then by the end of the day, it ended red. This is a name, by the way,
Dude,
Amazon, that I've been leveraging up on.
I had like 100K swing today. I was up like 25 this morning, and by the end of the day, I was down 75. I was just like,
it was one of those days. It opened really green and closed pretty red.
Yeah. Hi, John. Okay. Well, I guess if Maddie's coming on in a little while, I guess we can do. I do want to start looking at these charts and start just talking about the things that I see. Because as I've told you, I like my charting skills. Like I like the charts I make. I like that I'll like play with stuff and make one and then forget about it and come back and look at it like 6 months later and just see that it hit all these different levels that I identified. And I'm like, man, why didn't I trade this? So yeah, I have some of that going on. So we can look at some charts. I'm not going to give you buying or selling advice, but I'll say, hey, these are some levels that are some trends that look like they're going to be important. And so, you know, if we hit these levels, you might have decisions to make. Does that sound fair?
Sounds great. Not advice to your due diligence, but let's look at some charts.
All right. Let me get it open.
And then after the charts, we'll look at some of the comments that Dan Ives made around Waymo and what he sees for Tesla moving forward. I know that's been exciting with Tesla making new all-time highs this morning. So we will definitely get to Tesla, Waymo, and maybe even some loose projections of, you know, throwing some numbers on a napkin after the charts here.
All right. I think this is it.
First up, Biddy.
First up, Bitcoin. All right. So we are still in this long, we are still in this very long channel that started back in early 24, or maybe even as far back as 23. And you can just see this way just started broadening, and now we're stuck in it. We have moved back above this downward green line. So, you know, before we were trading under it, and it would, every time we would hit it, it would bounce, slap us back down. We finally broke above, tested going below it again over 2 days, and then back above as of today. So I think we will remain above this green trend line. But we crashed into this, to the bottom of our yellow trend here. As you can see, we tested going below it. We tested this red line once. Got to know there. We tested the 382 Fibonacci level here. Bounced off that and then got back on trend. Tested the fib level again, bounced off of it, and then started bumping our heads on the top of that trend. Now we've broken out of the downward trend. Are we going to ride it down? Like, are we going to surf our way down, bouncing off the bottom of it, or are we going to break above? Whenever we tried getting above the simple moving average, spent a couple of days above it there. This actually looked really encouraging that we came down and bounced back off of it. And then testing below it to come back up on a bullish hammer. That was really encouraging. But Friday and then Saturday, we had a full day of indecision. That's where you give that little doji, where it's just like you start the day where you end it. And it didn't really go anywhere because we had like no volume at all. and then everybody wanted to dump.
Well, this morning there was a huge candle up, and then it just
Yep.
sold off all day.
Yep, and we just hit the 20-day moving average again, and it just rejected off of that. And then we crashed back down into our couple of trends that, this trend moving up into the right and the trend moving down into the right kind of crashed back into that area. So now we'll find out where we got to be. But like the next big level of support, if we keep following this trend down, the next level will be the 382 fib here. That will be a place where I am interested in putting some buys at. I won't put a whole bunch there, but I think we will. When we touch it, we will bounce at least a few times. You might be able to say you get a couple of day trades on that. But then the rock bottom price is this 66.7, so we're getting a lot closer to that than I thought we would at this point in the year.
And so in that high 60s, that's where you really start foaming at the mouth and thinking about, really making a sizable chunk of your allocation.
66,783, the number in red here, that is the price of Bitcoin closing on election day in 2024. And in Bitcoin's history, it has never dropped below the election day close of the previous election cycle. So if we come below 66.7, we've thrown away 15 years of trading history.
Did you see Coinbase is getting into prediction markets?
Who isn't? Hey, aren't we starting a prediction market? Or I was talking with Matt about that.
You're gonna get me in trouble.
Start a prediction market. Hey, that's what we should do. We should set a prediction market on who's going to start the next prediction market.
That's good.
Do that. Eric Jackson's starting one. I guess that's his next 100 bagger, right? I'm just like,
yeah, I guess.
Who's not starting a prediction market? I mean, the software is super easy and it's not regulated, so dive in, right? Like,
yeah, I had some thoughts on Robinhood's event last night, and I told you my reasons for selling Robinhood, a few weeks ago, and I was not a fan of the event last night, and then seeing Vlad speak this morning, I just had a hard time getting behind what he was saying, because he was trying to like draw this line that the prediction markets aren't gambling, but almost all the volume is going through sports betting. And, he tries to paint this like rosy picture that sophisticated investors are using prediction markets to hedge their portfolio. But like the reality is just not really what's happening.
That's me. I'm sophisticated investor.
You're the only person using prediction markets to hedge your portfolio. And, he even mentioned something about insurance companies are taking notice. It's like, come on, man. No, they're not. They already have reinsurance contracts in place. Like, if insurance companies really were using Kalshi to hedge whether or not there's going to be a cat event, like a catastrophic event for a fire or a tornado or whatever, they would be seeing absolutely massive volume on these event weather contracts, but they're not. All the volume's on the sportsbook side. Sorry, I just had to get that out of my system a little bit, because it's like, you say that you're democratizing finance. I'm not sure that was that's what that was, and I don't think that they need to misrepresent what it is. I think they're perfectly fine offering those products and saying that they're offering those products. It's just, let's keep it 100. You know what I mean?
Yeah. So, here's so I pull it up the SPY. I obviously haven't touched this in a very, very long time. Probably August 04. But I mean, you can see we've got a double top here. That is always not good, right? And now we've moved below our moving out. Like, look at this run from April. Like, man, anytime we touched the 20-day moving average. It was just like violently moving back above it until October, and now we've seen a lot more chop. Now we're back below the moving average, and yeah, that's just.
I mean, you could basically remove everything on the chart between like March 15th and May 1st because it's not really relevant because it basically just did a giant whipsaw. But if you look at the long-term trend line, do you think that this is still intact here?
Oh yeah, look at the. I mean, we're still above the channel. Like we are still outperforming this channel. Look at this thing.
Well, does that mean a reversion back to the mean there, back within the channel, or does that mean that we continue to outperform above the channel?
I mean, it's going to take a lot to. It's going to take a lot. Like look what happened even when we so we kind of established the channel here for 23, and then we went above it. Look, like whenever we dipped below it, like we exploded out of it. Went back again, it exploded out of it. Went below it, exploded out of it. Like, I mean, we're going to touch it again, probably get it to like maybe this area, like 630. What's this move? What did Tom Lee say? 20%? Look more like 8% down in the SPY to get back halfway in the channel here. Like, and then I would expect to see it rocket back up.
And 8%'s not that much, but you know,
maybe
the
SPY
is too much. Maybe I'm on X too much, but I saw a lot of, just to be frank, a lot of bitching and moaning on X about how much people are down. Guys, if you are down more than 25 or 30% since like the beginning of October, we need to be looking at stronger companies or managing our risk better, or maybe taking some leverage or margin off. The NASDAQ is only 5% off all-time highs. You should not be in the hurt box right now. So if you're feeling like you're down a lot of money and that you've blown it, this could be a good opportunity to reevaluate your situation and, you know, get things corrected that you need to get corrected.
Yeah, well, I'm feeling hurt, but that's because I killed. Like, if you look at my year to date, still like double.
Yeah, if you zoom out, you're still chilling.
Yeah, it just has felt like a bad 6 weeks.
I think I'm mainly speaking to the people who poured a lot of money in the second half of the year, and you know maybe they bought, you know, IREN above 50, or they bought Rocket Lab in the 70s, or you know they bought Nvidia above 200, and now they're just really feeling the pain. And maybe they used margin, maybe they used options. We have to be responsible if we want to make money in the long term, rather than, you know, trying to chase short bucks.
Yeah, for sure. Yeah, so this is what I consider to be probably the most likely scenario. It'll look something like this. You know, the timing is probably going to be more around like Nvidia earnings. You know, you can probably put that on one of the pegs there, or.
So you like Tom Lee's call then? You just think it's not going to be so wild and volatile? Well, you think it's going to be more moderated?
Bro, 20% is like down here. I mean, I should redo this. I should redo this fib.
That would be a lot of fear, because if you compare that, you know, to the tariff liberation day fear, I mean, that was very heightened fear. I think fear and greed was down to like a 2 or 3.
Yep. All right. So if we just run this fib up there, I'm just going to hide. I don't like to kill them, but I am going to kill this old. Does everybody agree I can just get rid of this old one? It's so old. We've gone so far past it. It's not relevant anymore.
For the good of the show, Doug, you can do it.
All right. So
make like Frozen, let it go.
Well, you know, like I said, I like to keep my old stuff on there just to see how I did, right?
For sure. Yeah.
So, oh man, I drew that like boom right there. Yep. We're going to 630, and then just calling these out. The 618, yeah, and we're going here. Or I would say have some money ready to buy. Let me look at these support levels here on these previous runs, and it's also coincides with the 618, like the golden pocket. Have some money set aside for SPY, like buy a little bit before we get there by like 565.
Now I'm not usually a charts guy. I do have a request for you. Not to steal Jason's thunder here for Technical Tuesday, but dude, let's take a peek at Amazon, because I have taken about 35-40% of my position, and I've made it into 2.5-year calls at 200 and 220. Guys, not financial advice. Don't follow my trades. Do your own research. But that's what I've done with my position, because correct me if I'm wrong, but it looks like we've been coiling for quite some time. We've got a solid base at 210. The selling pressure from Jeff and Mackenzie's got to end at some point, and we are going to see some operating leverage. It might be 12 months from now. It might be, 18 months from now, but the operating leverage that's coming seems inevitable. What's this chart telling you?
This broke this earnings, like, man, they gapped up and then they just came back down and said, nah, all that stuff we liked, we don't like anymore. Like we like it less than we liked it in January of 2025. This is just so like the Mackenzie and Jeff selling is just hard to. I mean, look, you have a perfect 3, 4, 5. You've got that is like such textbook impulse wave, and then the correction ABC, but we don't have any of this formation looking like it's working here now.
Well, and you're saying that it broke really in like the last few weeks because, we had that gap up after earnings and the OpenAI AWS announcement right there where your 3 is.
Yeah.
And then it fell apart because of OpenAI and Oracle and the backlog, right. And now Broadcom.
Right. Like I don't. Yeah, this is not trading technically right now. So, I mean, I would love to be able to give you some answers. I mean, this is not so hot. I mean, a lot of technical people tell you that, it is the actual like level down to the cent that matters, and I'm like, I like to think of stuff as fuzzier than this. So even though this is a little above the line, I still consider it to be this same contact point. So this is pretty heavy resistance, and we broke above it once, and the market was like, get us the fuck out of here, and sold it off right away. And now we're back in this range, and there's another just like support level around here ish at 160. It's kind of a round number, so it makes sense.
Now, valuation wise, we're sitting just below 2.4 trillion, and something that I want to just point out, not saying this is my price target, but $3.5 trillion market cap would be $324 a share here. I don't think that if 9 months from now we woke up and Amazon was 3.5 trillion on the back of reaccelerated AWS growth, a killer Q4 where online store reaccelerates to double digits, they have third-party fulfillment dominate, and advertising business growing above 20%. If all of that happens and AWS reaccelerates back up to 23, 25, 26%, Amazon is going to go if all those things fall into place because they have so many synergies throughout their business. So you get up to 324, it can move quick.
Yeah,
We just saw the re-rating with, NVIDIA after April and the DeepSeek moment. So mega caps can re-rate fast.
They can, but we're about to get smacked with this stupid the stupid analysts going to start putting out price targets and they're all going to adjust down. Like that's going to be next week. You're going to see a bevy of like all the high flyers getting re-rated down. So you have to deal with that as well. But yeah, it's a buying opportunity for sure. But so I've got this fib now on here. We can monitor this every week and kind of watch these levels. I wouldn't be surprised if we just kind of, Tom Lee said we could expect to trade sideways for a little while. Like this would be ideal, right? Something like that. We would hope. But yeah, I mean, you're gonna stick in this for a little while, I'm afraid, and you might even visit the 3-2. I don't see this retracing back like to the 618 levels, like 150. But dude, if it does, like, have your money ready from 160 to 150.
Yeah, if we see 150, I'll be very red in the position.
Sell another house, like.
Yeah, I'll be selling my kidney to buy at 150. I will be. I don't know. I'll be taking a second job at 150. I really like it. Obviously, I like it at 210 here. I feel like it's been around this level for quite some time, and the business progress hasn't been sufficiently rewarded, just based on what we've seen in the earnings and the progress that they've made relative to a pretty flat stock price over the last 5 years. I think they've really built out the business quite substantially and haven't really gotten that much credit. What do you see here on Netflix?
More room to the downside.
I mean, this one can do that, right? I mean, we just saw a few years back it dropped 75% peak to trough.
Yeah, I mean, don't be surprised if it goes to 75.
Once again, I feel that this is a.
I
feel it's already dislocated. This is a high quality name.
But look at you have this area of support, boom, 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 like, and even a peak here and a peak here, and then you have this is just, and then it falls on this one fib level. Like, I'm just like, stuff doesn't line up like that on accident. But this is how algorithms seed markets, right? They have all this information and they can pick out all these levels in their algorithm. So they're going to trade based on that. All I'm trying to do is just find levels that are important that we can be aware of to say, okay, well, we expected it to get to this number, so I'm not afraid, right?
Now, much like Alphabet,
but this is just
in the first half of the year,
that's not good.
It's trading on news and narrative right now, similar to how Alphabet did in the first half of the year. So, that's why you see it running up in June and July when, it first got announced that Netflix might have been in the lead for this deal. And then you see a tank when that comes into question. And, you end up with this weird situation, this conflict point.
This RSI is crazy low too. I mean, if we look at the RSIs historically, like, there's only a couple of, like, this thing does not hit 30 RSI and stay there. Right? Like, it rebound. Like, if it hits oversold, like, this is the worst we've seen it as far as hanging out below 50 on the RSI. Like, every other time it's just been, okay, we made a trip down, touched 30 and exploded back up. I mean, it's been bad before, but this was like 20. I mean, I don't know why that might be the lowest RSI I've ever seen. And I've done this on crypto.
Well, and I think that 22 crash is just evidence that people are underestimating the moat here with Netflix. They think it's really flimsy. They're not really viewing it as a compounder with a true moat. And I think they do have a moat. I do think they're a quality company that is going to be growing for, the next decade to come.
Yep.
Because they have the biggest distribution, a large name brand, a technology level cost structure, and they're just dominating. They're winning right now. They're crushing linear cable.
Yep. All right. Well, this is the one I've done a lot of work on a while back, obviously, back around 100. Because I was trying to figure out what to do, around the split, like going into the split. So yeah, so this upper trend obviously held. Like we didn't really touch it, but it's still there. I think this is still, man, look at this. Look at this, man. October 22 opened at $11.86. That is insane. And then, even here, like you had this is just
and that box that you're highlighting there, that's when we know a lot of people who bought.
Well, yeah, I mean, this was the sell off after Liberation Day, or from
DeepSeek going into Liberation Day.
Yeah, from New Year's to Liberation Day. Like I said, that was hard to hold on a lot of things. So we had the post-election run up on like everything, right? And then like from Inauguration Day to Liberation Day sucked. But since then, it just exploded. So, I mean, are we getting a little head and shoulders here? Maybe. Let's look. Do you see what I'm talking about? A little head and shoulders action. I actually have a
potentially, yeah,
tool for looking at it somewhere.
So far, I've called the top pretty perfectly on this one. Again, didn't really mean to. That's just sort of how it unfolded. I think I told you I had a lot of the good news getting priced in at GTC when he came out and said that $500 billion number, and everyone kind of lost it. And I said I wanted to take some risk off.
I thought I had a head and shoulders here. Oh, there it is. Okay. All right. So let's just Okay, so the way you deal with head and shoulders is you take the distance between the head and the trend line and you move it down. 124. I think we should probably change this color to red, because if NVIDIA goes to 124, everybody is going red.
Yeah. But as long as the story continues and earnings growth continues to accelerate.
Yeah. That's a 27% haircut.
But what that would do to the technology sector, just like the NASDAQ in general, that would really punish. I mean, nothing would escape from that. Even Google would take a hit from that.
Oh, yeah. And this lines up way too well. I hate to see that, because it sounds like I'm making this crazy call, right? Like, okay, yeah, we're going down 27% on NVIDIA from here. I'm just saying what the chart shows me.
Sure.
I don't know if I ever agree with it. Like I said, I don't trade the charts. I just do it for entertainment. But that's a 50%. That's just a 50% retrace. Happens all the time in high beta stuff, and it is how you make a crap load of money by buying on those levels. But like, look, these lines, they're just lining up way too well. And even with the 618, the golden pocket, like that is just too excellent of a setup.
Did you want to chop it up about
yeah? So
Waymo and Tesla?
You want to get, yeah, I do. So if you want to get liquid now, hold on till hold on till tax day. If you want to get liquid, hold on till tax day. I would be interested to see how that happens. There's nothing, there's like, you can't go back on it and you'll be like, oh, I should have done that, at the time.
Yeah, I just think a lot would have to change with the story for that, something like that to happen.
But
or Mr. Market just freaking out about nothing.
Yeah, well, that's what we're doing already. And what's going to turn us around in March, April? A Fed meeting, right?
Maybe. J Powell's there till May.
Yep.
Tesla all-time highs. Congratulations to longs.
Every all-time high feels good, but it sucks when it gets sold right back off.
It does, but still, it still feels like, green sky territory. Yep. It cracked new all-time high, so it still feels like it's fresh here. Now, I made a post on X that was a response to a lot of people
to me trolling,
to you trolling, but also a lot of people just in general saying, Waymo's going to be crushed. It's going to be obvious in hindsight that, they have no ability to.
And Ives.
Yeah, saying Waymo's going to be a rounding error and that the battle's already over. And I'm sorry, we just have to, again, put our feet on the ground and touch some grass and maybe get to reality a little bit. Waymo has completed 20 million paid employee-less autonomous rides. 20 million. Tesla is still at 0. They released a video over the weekend of one car driving without anybody in the front 2 seats, and Elon Musk confirmed it was not in service for the robotaxi. But he did say within about 3 weeks that we are going to be seeing, hopefully, autonomous rides happening on the robotaxi network.
We knew it would. Like, we've always known it was going to happen. It was the time frame. And we've always known.
He says 3 weeks. We don't know what that means.
Right. Well, he's talking about how long it's actually should take, and then there's how long it actually takes.
Right. Which when you're consistently wrong by an order of magnitude of 5 to 10 times,
I'm terrible at estimating labor costs when I am pricing out projects. I'm terrible at it. And, you could say, well, labor cost is essentially a replacement for time. So I'm terrible at it too.
Now,
engineers, and I also wonder if he assumes that everyone is working as hard as he is.
Yeah, maybe. But one of the arguments I see that pops up again and again, and this is why I wanted to have a little fun, like modeling it out and doing some back of the napkin math, is the Tesla fans will consistently make the argument that because the vehicles are lower cost, that the cost per mile is going to be much, much lower, and that Waymo has no chance of being profitable. They'll say things like it's not even profitable yet. How is it not profitable when it's really in like its second year of commercial operation, and that it's a nascent technology? Waymos are going to get cheaper as they move on to different models like a Zeekr, and as LiDAR itself gets cheaper. the other thing to consider here is that if you move on to a model where you have personal autos that are being rented out on a network, first of all, there's not insurance in place that actually makes that a possibility. If you rent out your car or just use it on Uber or Lyft, livery, which means you're driving someone around for pay, livery is excluded. So if you're driving around on Uber and your insurance finds out about it and you get in a crash, that's typically not going to be a covered claim.
You ain't covered, bro. Yeah.
You ain't covered. And so now on top of that, and there's not many companies that even offer that rider to where you can buy back that coverage. Fun fact, I actually did some Lyft driving for about a month a few years back, and I even purchased that specific coverage, and they still denied my claim. It was literally called the rideshare coverage, Dougie, and they still denied it. And they said the reason was for rideshare. And I'm like, man, just when you think that you've outplayed the snakes, they get you somehow, you know?
Yeah. That sucks. I'm sorry.
Oh, it was only a few $100s of damage. So it was more the principle of the matter. But, you know, you do have to solve this insurance solution. So I think something that would be really high signal for Tesla is if, you know, they're willing to take liability coverage of the autonomous vehicles, or at least underwrite their own insurance for all the personal autos that are going to be on the network. Because it's not going to work well if you don't. It's going to get really messy really quick. The other thing is utilization. So Waymo is a commercial operation. They have full-time staff running a depot for charging and cleaning out the cars, and that's how it's happening. You know, if everyone has this vision of like you're going to drive to work with your Tesla, and then you're going to send it out to do 25 rides all day, and then it's going to come back and somehow be magically charged and clean. That's a little bit divorced from reality. Not everyone who owns a Tesla is going to want to do that. Steven Ferriello talks about that all the time. The second thing is that, you know, who wants to have their car come back to work and not have any charge left on it? You're going to have some grace there, or, you know, if the car goes out and makes 2 rides and then it gets dirty, like at some point you have to take a break in your workday to make that happen.
Hold up, wait a minute. You're getting a little ahead of things now. Okay. Let's evaluate what can be done in software. I mean, you're finding great, you're making some good points. You know, no one's going to want to do. I hear this on TCAF. No one's going to want to do that. They had was it Ives? Yeah, they had Ives on. They were like, oh, who's going to want to do that?
I'm not saying no one's going to do that. I'm just saying like the average person who is using it as their personal car and then renting it out. I think there's going to be a lot of fleet operators.
But Musk is also trying to change what it means to have a car, to own your own car. Like, if you think like 50 years from now, okay, look, the kids already don't want to drive. Okay, they already don't want to drive. So do you think they're going to care about whether or not someone was riding in their car when they're used to taking Ubers anyway?
I think
they're not going to care if someone was riding in their car and it went to a cleaning spot and charged and cleaned while it was there, as long as it picked them up from work and had enough charge to get them home.
If Tesla takes care of the cleaning, that's a different story, but that's a whole nother operation that they have to stand up. The other hurdles, obviously the regulatory ones, I'm not going to beat that to death, but you know, by my estimation, a Waymo with high utilization is probably going to do a lot more rides than like just the aggregate of Teslas, because you're going to have some cars that don't participate at all. You're going to have some cars that participate a very small amount. And then, of course, you're going to have some cars that do get full utilization who are standing up a professional fleet. So the argument that I saw that you know, sort of inspired this tweet was around CapEx, basically saying that Google and Alphabet and Waymo, they're not going to get their money back, and that the economics of such an expensive car, which they're way overestimating how much it actually costs, but they're saying that economics don't make sense. And if you really break it down, if you take a car that is doing $25 a trip and they're doing 30 rides a day, which is probably on the low end. There's probably some Waymos here in the Valley that do 50 rides a day, but let's just take those numbers. They're going to gross $273,000 a year. Now, of course, you have to back out like depreciation cost, charging, cleaning, tires and brakes.
Yeah, those are going to be equal. I mean, you would assume those would be roughly equal across their competition. So if everybody has to deal with it, then it just zeroes out.
Well, you're going to have a little bit more depreciation on the nicer Jaguars than like a $30,000 cyber cab. And then you're also going to lose some margin on the fact that Alphabet's not producing the cars themselves. So the automaker is going to take some margin, whereas Tesla's vertically integrated. So that's another advantage that they have on the production side. But in terms of what that means in economics for Waymo, if you're grossing $272,000 in the first year and the vehicle only cost $150,000, like your payback period is going to be cash on cash 9 months. So it's going to happen pretty quick. And Alphabet has a huge balance sheet. Like I don't think it can be understated how much free cash flow, operating cash flow, how much cash they have on hand. They can easily afford to continue making these investments. Matter of fact, Waymo just said that they're going to raise some more money too. And just like every round, I'm sure Alphabet's going to lead that one because they're the 51% owner. And then if you compare that over to the Tesla model, if they don't spend CapEx, I'm gonna show some numbers here in a second that show what that licensing model looks like. If they just say, hey, we own the network, you guys all own the cars, and then we'll take like say 60% of it. But the other model, if you look at them actually owning the fleet, by the way, I've gotten responses from Tesla bulls saying, no, you're wrong. They're not going to own any of the cars, but also, no, you're wrong. They're going to own all the cars. I've actually gotten both responses, which I found interesting. But if
no,
Tesla,
they're wrong. They're going to own some of the cars.
Some of the cars. Okay. I figured the truth was somewhere in the middle there. Now, where it gets tricky here is if Tesla spends a really large amount and say they buy like 500,000 cars and they put that huge amount of capital into building out a fleet for just say a rapid expansion, say Trump like does an executive order or something crazy and Tesla just runs at lightning speed, they don't have enough assets and cash on the balance sheet or income or free cash flow to make those things happen. So if they were to essentially come up with the cash for $20 billion of capital, that is 4 times their net income and 3 times their annual free cash flow. So they would have to scale it a little bit slower than that. Like, can they do it? Yes. What I would do is, if I was them, would just be like dilute the shares
they
and
do
raise
have
the cash that way.
They do have an asset's the wrong term, but they do have, I guess, a little bit of an ace up their sleeve. I don't know if it's an ace, but it is definitely a card to play. They can buy back a bunch of used Teslas.
But that might hurt the experience there, right?
If there's a an opportunity that they just need to go gangbusters in, they could do that.
My understanding is the hardware is not the same though, because doesn't the old hardware not work on the new software?
It still works. The hardware 3 doesn't work as well as hardware 4.
But all eyeballs are going to be on this.
They have already committed to upgrading the hardware. So that's not a cost that, like, it's not an additional cost. It's something they were going to plan to pay for anyway. Does that make sense?
Yeah, it does. Now, flipping back over to what those numbers look like for Waymo, they could easily afford the investment because based on the number of vehicles that they would actually need, it would be less than 20% of their free cash flow, less than 20% of their net income, and a small amount of their cash. So in terms of like who has the war chest here, it's definitely Alphabet. We should look at the income statements if you guys want to confirm that yourselves. What else were you going to add?
I was just going to add that, it seems like every time I talk to you, the technology is a little better. I got another update
Nice
on FSD, and you can hold your phone now. Not only can you, so when you and I started having these discussions, if you even glanced down to your phone at the charging dock, it would be beeping at you to look on the road and threatening to shut off FSD. Now, and then later, then it would be like, well, if you touch, like you can't even touch it. Like if it detects you're holding it. Yesterday, I took a FaceTime call while FSD was driving me around. And
that's really good because I consider that like a high signal type thing. You know, one car driving by itself from the factory to someone's house, or
already
just like,
done that.
Yeah,
they already did the delivery.
I think it's just like more of like a publicity stunt. But when you're actually like materially reducing the amount of nag that you have on the system itself for everyday users, that's high signal to me, and that indicates that they're getting closer.
Yeah. So they're letting average people now, like you can just like it now, you'll still get a beep that says pay attention to everything around you. Okay. But all they want you to do is look up. Like, so I'm looking at my phone, I'm talking to my niece, and then I just look up, and that satisfies the system, and I can go back to what I was doing.
That's great.
So it's like, okay, maintain a little bit of situational awareness, but the car's got it. It's at least fixed now to the point of, so where what it used to be like is, oh, I want to check this text, I have to turn FSD off so I can look at my phone. So at least now it's at the point where I can use FSD for what I needed to do, which is operate the car while I'm temporarily distracted.
Right. Now, putting all this together here, I did want to put some numbers together and share this. And what I'm going to do here is...
That's your bank account?
No. So...
Matt Money's bank account.
Matt Money is streaming the Rocket Lab launch right now. So if you guys want to check that out, go over to his channel. As I wrap up some modeling here for the Tesla. Let's say we've got 100 million rides here. And we'll call this annual. So 100 million rides is pretty big. Waymo did like 14 million rides this year. So 100 million rides would be pretty ambitious. This could be year 2. This could be year 5. Your call. But if you do 100 million rides, $25 a trip, we'll call that average, $25 a trip. And we'll say that Tesla license.
That was actually what I wanted. They're going to compete the crap out of one another. You're not going to get $25 a trip. That is going to that cost is going to come down to super cheap. Okay,
so let's say we've got a race to the bottom. Let's say 1750. That's a pretty big haircut here. So you get 1.7 billion of revenue, but we have to consider that Tesla is going to take a licensing fee. We'll call it 60%. You could even say they're going to take 70% here, a little bit more charitable. They're going to get a good chunk of it. After all, they did solve full self-driving. You get $1.2 billion of revenue. This is before expenses. So this is before depreciation of the car. This is before cleaning, charging, tires break, all the same stuff that we mentioned with Waymo. Now, 1.25 billion might seem like a strong number. You have to remember the market cap of Tesla is 1.6 trillion. So if we look at it as a car company, we obviously know it's not worth that much. But if you look at it as a robotics and AI company, that's the argument. So using that argument, this is what we should look at here. 1.25 billion doesn't really get the job done because now you're at over a 1,000 PE. 1,000 price to sales, because this is before expenses. Mm-hmm. Now let's say that they really crush it here. Let's give them 1 billion rides a year. And again, we'll say it's 1750, and we'll give them, we'll raise up the take rate here. We'll say that they take 75% of it. You get $13.1 billion a year. Now you're hoping that this is really high margin, like 55, 60, 65%. You're hoping that this margin is really good and that you're taking most of this to the bottom line. But still, at 1.6 trillion divided by, say 10 billion, because we just said that the top line of this product line would be 13 billion just for robo-taxis and their licensing. So we'll say they drop like 70% of that to the bottom line. We're being really charitable here. so 10 billion. You're still at a 160 like price to earnings. It's just really, really hard to get there. You have to be buying for really far in advance and or believe that their margin on the cars that they sell to individuals gets lots of upgrades from people who want to pay for full self-driving or get the subscription for full self-driving. Some of those things have to happen, or even, the robots,
Dude,
getting good sales. But some of those
once
things
you
have to
get
happen.
used
for
to
Tesla
it,
make
you
sense.
cannot go. This is one of those things where once you get used to having full self-driving in your car, you cannot go back. I have a company car that I drive, and it is so like it hurts my soul every day I get in that vehicle to drive to the office, knowing that I'm walking past my Tesla in my driveway that my wife drives. Like, I really, really hate not having FSD to drive into Houston every day.
And
So, I mean, if we were to think about, okay, the recession has hit, what subscriptions are you dropping? Are you dropping Netflix at $17 a month or $14 a month? Or are you dropping FSD at $100 a month? Bro, I'm going to think about it.
yeah, it's a good question. And what I'm pulling up here is both the
they have
operating
done a
margin and the
really bad
profit
job of
margin.
selling it. They've done a terrible job of selling it.
Right. And this would help solve that exact problem. Like you could get a U shape here if they can actually upsell this awesome technology. Because, I've been a long time like Tesla skeptic, because it always seems like it's one software update away. And Elon has, quite frankly, he's oversold, underdelivered for quite some time. But I'm not opposed to changing my mind if they show me evidence that they have solved it. I will go and buy a Tesla, and I will be purchasing it specifically for full self-driving. And then, if these margins improve, then that opens up the playbook for them.
Well, I mean, if you're buying, so I don't love the fact that they have separated buying a Tesla from buying FSD. I mean,
you think it should come together?
It should. Like even if you upcharge it, like people don't buy Teslas because they're cheap. You know what I mean? Like,
some people did, because they were pretty darn affordable. If you took the California tax credit, you took the federal tax credit, and maybe you had like free charging at work or something. Like, it's a very good cheap commuter vehicle.
And that's true, and that's how it was designed, to be able to do that. But it's just like, I don't feel like, man, those people who bought that, they don't even try FSD when they release it for a free trial. And they've got to get NFL commercials going where people are watching FSD on TV. That's the only thing they'll do to believe it. As I don't know, Austin just fell over and died. I don't know what happened. He's got to go to the door. Okay, I guess his DoorDash or something is here. Probably not delivered by an automatic Tesla. Raven asked, "What do you guys think Uber figures into all this?" Uber is Waymo's bitch, or is going to be Waymo's bitch.
I come back and all I hear is Waymo's bitch. What did I miss?
Raven wanted to know what's going on with Uber. I'm like, Uber's just Waymo's bitch. Waymo's bitch. That
maybe
Waymo is gonna take the top of the queue for all the demand, and then Uber drivers are going to fill the bottom.
No,
And-
I've seen some pretty good
and
responses on this
drivers,
thing.
and as human drivers struggle to find rides to drive, they're going to quit doing it, and that will make more room for Waymo to take the rides away from them.
The counter arguments I've heard to this are similar to what the Uber CEO has actually mentioned himself, and one of the components here is that you have peak and trough activity, so you can't ever have 100% automated cars because you're gonna have a shortage of autonomous vehicles for quite some time. So the idea is you want to keep the car at 100% the whole time because there is a supply shortage. So what you would have more human drivers for are those peak times when there's lots of people
Hold
requesting
up.
rides.
Wait a minute.
That's just the counter argument that I've heard, and I think it's a decent point.
You know how many rides you're going to need. You have enough vehicles deployed to handle it, or you build enough Waymos to handle it.
Well, that's the bottleneck, isn't it?
And that's well, so it can't be both a temporary bottleneck and the reason d'etre for for Uber to exist is we're just gonna fill in what Waymo doesn't eat, and then it's like, well, yeah, but they're gonna build more Waymos every year. Eventually, you're done.
Not if you can get into delivery too. So they're doing a good job of pivoting into delivery.
Last 10 feet delivery. Like, you got to get it from the sidewalk to the front door.
Speaking of delivery, I just got my delivery here. We're drinking our Bud Light here. I asked for Coors and he delivered Bud Light, so
we can go a little nicer than that. Got our Heaven Hills.
There you go. Some good old bourbon. But that's just what I wanted to share with Tesla, was some of that modeling information that, I was just poking around and looking at some of the numbers.
I really like how you put together those stuff. I don't always agree with your conclusions, but I really do appreciate the analysis that you put together there.
Yeah, and my numbers might be dog shit, right? But the thing is, like, you do have to try and attempt.
The numbers aren't dog shit, but what they show is, hey, this is the problem that Elon or the Uber CEO or whoever, this is what they have to fix. This is their challenge, because this is how the math is mathing right now, right? One of the things that I thought of when you were on the calculator there is, yeah, but so you can show me in a year that they do 1 billion rides, but on this S curve, they're going to do 4 billion rides the next year. It's like this thing is going to scale very, very, very rapidly.
Yeah, and of course, my Tesla neutral pushback would be that
I'm just saying for all the automated drivers.
Yes. Yeah. Now, I think specifically with the Tesla story, there has been a lot of conversation, from Tesla management that you're going to have like this one software update. We solved it. We did it, guys. They're going to snap their fingers and then it's going to be rolled out nationwide. I don't see that likely as happening because of all the other reasons that I mentioned. Like, you have to stand up regulatory with state and local. You have to figure out insurance. You have to figure out charging.
Those are going to get faster.
Yeah, they will.
Charging is an interesting thing for Waymo. Tesla has superchargers all over the place.
Right.
Are Waymos going to use those? Because you mentioned earlier, one of the things you were skeptical about on Tesla is whether or not they can solve the cleaning and all that stuff. Well, dude, they've already gone a long way into solving charging accessibility. I mean, yeah, there's a few places where you don't want to be stuck without a charger, like North Texas, rural North Texas.
But like the areas where robotaxis will be operating, they'll be fine. Have they figured out the self-charging yet? Because I know that they were working on that. I'd seen a video where basically without getting out of your car, the Tesla
Inductive charging
was charging itself.
The tech works. I mean, you got wireless charging on your cell phone. It's the same freaking tech, just at a different scale. I mean, you're not violating any laws of physics to do it.
Well, is that the same speed though as if you get out and you actually stick the thing in the side of your car?
I mean, like it's a physics an engineering problem. Okay,
because the speed matters. It does, because that's your downtime
for sure. But okay, so you might have a trade-off where in 10 years they have cut the charging time on a plug to 5 minutes, or your wireless charging is still, honestly, when you're driving like cross country in a Tesla, it really only has you stop to charge for 5 minutes at a time. It's usually you drive about 100 miles and you charge for 5 minutes, drive for 100 miles, charge for 5 minutes, drive for 100 miles, charge for 5 minutes. It's not how I prefer to drive cross country, which is just like set it and forget it, or like take one longer recharge and then pass a few stations. But that's the most efficient, cost-efficient way to actually do it, is kind of puddle jump. But so if they say, okay, well, you can get your 80% charge in 5 minutes if you plugged in, or you can just drive over the charging plate, and you're already taking a nap and not driving anyway, so what do you care? Like,
well, the reason I ask is specifically for robotaxi. If there's no one operating the car, can you send it to the charger, it charge itself, and then come back to you? Because that would not only be cool if you own the car, but if you're operating the robotaxi, it could just stay out indefinitely. And the other thing I think about too, and I think really
an easier solution. An easier solution for that is obviously like you'll have like a plate that newer models can drive over and inductive charge, like your Qi charging on your phone. Okay. But like a much easier way is just an arm that just deploys to the. I don't know if you've ever seen anyone charging at a charge station, or if you've ever done that before. Like the app and the car knows who you are, so you don't like enter your payment info or anything. You just park and plug in, and the network knows. It knows your car, it knows you, it knows your payment info. You don't enter any of that. It's already in the app on your phone. It's all, this all happens in the background. You don't even have to open it to authorize it. Like all you do is plug in, watch a video, unplug and go. You don't mess with anything else. So, like a rigid arm, that's on like a robotic arm instead of a cable, like the FSD could back the vehicle. Let me just get my hands on here. So you can back the vehicle up to a certain spot, and then the robot arm comes in, plugs into the charging port, withdraws, and the car moves on. Like that's not that hard to solve. But yeah, the inductive charging, like charging over a plate, is easier. It's just more stuff to build, and then you have a heat dissipation issue, but they already have that with how rapidly the superchargers work anyway, that they've already solved. Plus, they're going to be charging semi batteries. Do you think that the battery in a Model Y is going to challenge one of those? No.
Well, the semi is a whole nother TAM right there. If they can figure out the semi, that's a lot of money.
And
I'm gonna remove one of these items here. I think we just had one left here, which was this one here. We saved the politics for last.
No. The last one is the last one.
Oh, this one? We have to talk about that one?
Yeah, I want to hear about that, because I only got like a one-liner about it all week, and I didn't follow up with it because I put it on here and I wanted to hear about the adventures.
Yeah, so we'll get it out of the way. I got bit by the poker bug. and I played something like 30 hours over the course of 5 days. 3 of those were like weekend day or weekend day long binges, and I've looked at playing poker and have played home games for a few years. I've actually watched like a good amount of pro level poker, but obviously doing something is a little bit different. So I take my ass over to the 1-2 no limit table at the casino, and you get killed by rake, but it is what it is. And I had some running bad with some playing good, and then I started running good and I started playing bad. And I actually made more money playing good and running bad than I did when I made a few bad decisions. And man, you make 2 or 3 wrong moves, you can really cost yourself a good chunk of money. So, the bankroll started at 500, went up to 900, yo-yoed back down to 500, back up to 700. And then, the bankroll went to nothing. So, taking a little bit of break here, 500 in the hole, learned a lot. So I'll have to reapproach it maybe with like cheaper stakes online and really study the game, because it's an easy trap to fall in. That if you have
30 hours,
about 30 hours, yeah, and I think it's an easy trap to fall in, that if you've had success in one or several areas of your life, that you think, oh, I'm a fairly smart guy, and this is like an intelligent level game, and it's a game of math, it's a game of odds, and knowing the appropriate amount of risk to take. And there's a lot more to the game than just being able to like reason your way through the cards. There's a lot of math involved there as to when you should be aggressive and when you shouldn't, or what line your opponent is taking. There's positions happening. For those who don't know, the dealer button moves around the table, so not every seat is created equally. So just sorting through all those dynamics in real time. Good learning experience. I had a lot of fun.
Yeah. Well, and like you said you played about 30 hours and it cost you $500.
Yeah.
It's cheaper than going to Disney World.
Exactly. Yeah, and of course while you're there you get, like free drinks and food and whatever.
Cheaper than going to Disney World. That's all I'll say.
Exactly. I had a blast and I learned a lot.
That's cheaper than going to the movies for 30 hours. Just saying.
I am gonna get dragged to see the new Wicked at some point. The second one.
I didn't need to see either of them.
Yeah.
I never saw the show, but I familiar, like I listened to the music a lot and was very familiar with it and liked that, and saw no reason to take a like what I assume is probably a 2.5 hour stage play and turn it into a 5-hour movie.
We got the Rocket Lab update. There it is.
All right, fantastic. I'll watch that on clips later.
Well, I want to see. I'm curious if it did anything in the after hours here.
Oh, we've kind of got to the point where a launch doesn't affect Rocket Lab price. Which is good, right? Because that means that the company is now trading on its ability to execute its business, and its launch capability is almost taken for granted.
Yeah, good point. Our last point here, wrapping up, is this one's just going to be straight up political, I think. So for those of you who don't want a little bit of political, I might have run you off already with the Elizabeth Warren stuff or the Bernie Sanders. If that scared you, you should be shaking in your boots. Doug, tell me what your theory is here about January.
I think the Democrats are going to double down and shut us down again in January. They're going to find another reason to do it. No, they're going to find another reason to do it. It could be ACA subsidies, which, like, I'm fine. Don't pay it. Someone explain it tomorrow. So not only do we have to pay our health insurance, they're also taking our taxes to pay the subsidies down on the premiums for people who are on Obamacare, to pay those, basically pay a portion of their premium so it lowers the price. So then the insurance companies can come in and raise the price because the government is paying that portion. So the consumer is not price sensitive to it, and they're just bilking us for more money. Like, government subsidies is not ever how you lower the price of anything. It's how you raise the prices. Yeah, but yeah, I mean, they're just going to shut down because it worked. They're going to do the shutdown because it worked. And last time it wasn't about the ACA. It was about the election. Don't get it twisted. There's a reason the week after the election, all the special elections for all the open seats.
Got it.
Yeah, those were all like the Virginia governors, attorney general, a couple of Senate seats, and some representative seats were all open.
Those were always going to go blue.
All went down.
Those are all
they were always going to be blue, but they made sure that they got their people out. Like so, yeah. But they saw it was a winning tactic, so of course they're going to do it again, 100%.
Did you see this?
Can we bet on that on Robinhood yet? I'm not joking.
Oh, I know you're not.
I'll put $1,000. Do you know how bad my portfolio is going to do if we shut down again? I'll put $1,000 on it to shut down.
Yeah, I mean, back to your good old UVIX call theory, right?
Intelligent investor using it to hedge against markets. Vlad called me an intelligent investor.
So I'm not sure if you saw this today, but speaking of ACA subsidies, do you recognize this? Have you seen this yet?
No.
Okay. Since we're in political corner here, this was just hung up at the White House today.
Are you trolling?
Oh yeah. So I'll read it because I know you guys can't read that print. Barack Hussein Obama was the first Black president, a community organizer, one-term senator from Illinois, and one of the most divisive political figures in American history. As president, he passed the highly ineffective Unaffordable Care Act, resulting in his party losing control of both House of Congress and election of one of the largest House Republican majorities since 1946. He presided over a stagnant economy, approved the terrible Iran nuclear deal, and signed the one-sided Paris Climate Accords, both of which were later terminated by President Donald J. Trump. Under Obama, the ISIS caliphate spread across the Middle East, Libya collapsed into chaos, and Russia invaded and took Crimea and Ukraine. He crippled small businesses with crushing regulation and environmental red tape, devastated American coal miners, weaponized the IRS. We get the idea, right?
Yeah.
He's just a generational shit talker. It's so hilarious.
Oh my God. And his post, like his thing on Rob Reiner really pissed me off.
I didn't see it.
Just say nothing. Like you could just say nothing. Like
what did he say?
Something. He went like he shit talked the guy who got murdered. Like the day after he got murdered. You'd think that a guy who actually had his ear shot would have a little bit of grace for somebody who actually got murdered. I'm just like, Jesus, like, don't like be a dick to people that are still alive, not the ones that are dead. They're dead. Oh, he's also one of the greatest artists in America, in American history.
But what would the Democrats, just to play out the game theory here of like how it would work politically, why would they want to shut down the government in January? Like, do you think they're going to be successful in blaming that on the Republicans somehow?
Yep. Well, no, they're going to shut down the government to make the jobs reports look bad, like to downstream all the data and make everything look bad, so that when they're running in the election in the off-cycle elections, that they have like. Of course, everything's bad. Y'all made it bad on purpose. Like,
so your theory is like straight up pure sabotage of the economy.
Yep, pure sabotage of the economy on purpose, so that they can knock DJT's feet out from under him. Who's going to want to run on the economy?
Did you see any of the address before we went live?
He was stroking himself. I You know,
That's basically what it was.
you got to get through all the stuff that he's going to say anyway about himself to get to like the real thing that he's there to talk about, and I didn't know what that was.
Yeah, I mean, he hit the main talking
You're already
points.
live. I didn't get a link.
I thought I sent it to you. I did not. But yeah, I went live like 3 minutes early just because I thought it was interesting. Because I thought there was going to be more commentary around Venezuela specifically, which I think some people are missing the lead here.
Did we go
guys,
to war with Venezuela?
It seems like we're about to, but guys, the lead here is that Venezuela sells China a lot of oil. That's the lead. So,
I mean, all I've been seeing is that, you know, Tim Walz wants to ban assault weapons again. So, like, taxes aren't high enough. I'm just looking on X. Elon Musk is a trillionaire and is evil, and they should force him to sell everything. I'm like, that's just gonna make all your teachers who are invested in the S&P 500 through their pension funds, that's gonna wipe them out. Like, if Elon has to sell all his shares.
yeah,
that will take the entire market down. That's not just taking Tesla down. That's taking the entire market down.
forgive them, Father, for they know not what they do. It's just one of those things.
Toast is green after hours. Netflix is green after hours. Microsoft, Starbucks, green after hours.
Did you want to do a quick society silliness section? I know.
Oh,
I sent
yeah,
you
I do want to make that a thing for us. I didn't have anything ready, but I thought that could also be a bit that we do. Like, so what was your societal silliness?
Yeah, so the one that I sent you, this came from mlive.com, which is Michigan, and it says the city council voted 10-0 to direct city staff. This is in Ann Arbor, Michigan. To direct city staff to remove all neighborhood watch.
Yeah.
Huh?
Put the tweet on screen.
Oh, I don't. I had it on my phone. Let me find it here.
Oh, I have the WhatsApp app.
Okay. Yeah. I'll read it off here because it's really short. But yeah, the directive was 10-0 by the city to remove all neighborhood watch signs by July 15th, as the city strives to be more welcoming and inclusive. So it's like one of those blue signs that says you're now entering like a neighborhood crime watch area, and Ann Arbor is getting rid of all of those. And of course, the obvious here is like, who does that make the community more welcoming to? Obviously, just criminals, right?
Yeah, this is a senator saying this.
Well, it was the city council that removed the signs. I think the senator is just pointing out how silly it is. But yeah, certainly interesting. The other societal silliness that I saw, a tweet caught my attention that I guess in Seattle, for the World Cup next year for soccer, they are going to be hosting a game that's overflow from LA. Obviously, they don't have enough stadiums just in LA to run the whole tournament. So they're going to have Iran play Egypt on LGBTQ like parade day at the end of June. So that's
should be interesting.
I'm going to have my popcorn. We're going to find out how, Queers for Hamas works, Let's see it happen in real life.
Yeah.
Do they agree? Do they not agree? Take your vote.
Well, one thing is that the athletes are kind of professional-ish athletes now, so they're a little more world. What's the word I'm looking for? They're a little more cosmopolitan. than the standard folk.
Hmm.
So it might be nothing, but certainly will be. There will definitely be some memes.
Yeah, I mean, just the dynamic between an extremely conservative country versus country soccer match versus like one of the most liberal cities in all of Western civilization, really putting on their shoes and dancing. Yeah, it's some intervention is going to need to be had, I think, to prevent something bad from actually happening, and hopefully that doesn't. But hopefully we get some good memes out of it.
Oh, I mean, the internet is undefeated when it comes to making memes.
Tis. Speaking of making memes, should we start making like memes for Bengals ownership to
Fire Zach
shame them into doing the right thing here?
and Fire Zach.
Absolutely.
Yes. Well, I mean, all you gotta do is post the record, bro. Like,
Post the record without Burrow.
yeah. I mean, that's the difference between Sean Payton, who's actually an elite coach. When Drew Brees was ever hurt, the team still played really well, and they could win with defense when Drew was not playing at his best. Like what?
Sean Payton
Sean
is winning
learned,
games with a rookie.
Yeah, as Sean learned coaching, because he was an offensive guy and they didn't play defense at all. All they played was offense for a long time. But then, like, as Drew got older, he was like, oh, I have to start, like, coaching the defense. I have to start making sure the defense is good, too. And he learned how to just win football games. I'm just saying, like, Zach ain't it. Zach likes to call plays on 4th and 1 with empty backfields.
Mm-hmm.
And, like, you could line anybody up at running back, and the defense is like, oh, better make sure that they're not handing the ball off. When you don't have a running back, they're like, let me just cover these dudes. Like, you know,
it just makes the job so much easier on the defense.
They're all running slant routes. Like, I did not play ball. Okay, I did not play football. I know these things are coming. Like, this is obvious. If it's obvious to idiots, why do you think? Like, because they're just clever. It's just being clever is not working out.
Now, some of the comments from Burrow, people got a little hysterical on. A
movie you've never seen. Sorry.
No, go ahead.
You've never seen, Dogma. I know you've never seen it because you're not old enough to have cared about it the last time it was available. That it was personally owned by Harvey. It was locked up because it was personally owned by Harvey Weinstein. It's a Kevin Smith film starring Ben Affleck and Matt Damon.
Okay, it's on my list.
And Chris Rock. And I think I lost my internet. Or you did. Anyway, yeah, Dogma. But it was held by the government or something, or Harvey Weinstein couldn't monetize it, couldn't sell it. And I don't know, they did something and now it's available again. So it is now for sale on like the Amazon store or something. But yeah, Austin's video is locked up. Yeah, Austin is frozen. Yeah, but Dogma is available again. It is one of the all-time great movies. Or I should say one of the all-time great scripts. Thank you. Austin is frozen and I am fine. These are great. I'm not sure what stereotype you're referring to, Raven. But sorry, Austin, I interrupted you. You were about to make a point on the Bengals who. Oh, yeah. Oh, and it aged, and Raven Dogma aged very well. Very well. Austin's trying to rejoin, and then he ducked out again, and now he's trying to join again. I don't know. We'll find out. Anyway, we did reach the end of our docket, so we're just shooting the breeze now. Anybody got any questions? Anybody want to bring up a topic in the chat? I don't think we have a whole lot of people, but if somebody's got something they want to hear a rant about. All right, Austin. Well, I will just, since you started without me, I will end without you. How's that sound? All right. So fire Zach Taylor. Hashtag fire Zach Taylor. Save Burrow. We have the holidays coming up. I am working more than I thought I was going to. But yeah, it'll be interesting. And then also don't forget, Amit's meetup is the end of the last Sunday, I think, in January, or it's February 1st. It is February 1st, Amit's meetup in New York. I am like 99.9% going now. Getting my flight situation lined up. So got a bunch of our Houstonian crew confirmed to go as well. It's gonna be fun, and I think the mods are actually gonna be we're all gonna be staying in the same place. So gonna have like almost like a mod sleepover. Although the last time we all hung out, we were all up to like 5 a.m. anyway, so there wasn't any sleeping going on. Just shooting the breeze, hanging out, getting to know one another. Had a blast. Looking forward to it again. Although in Miami, it was nice and warm. It was the summer. It was fun. Now we're talking about going to freaking Jersey or New York in the middle of freaking winter. So yeah, we'll see how that works. Yeah, June, it's a Houston mob. You got to come. You got to come down to Houston sometime. Amit will eventually fly over Texas, I guess, on his way to California that he goes to all the time. But yeah. Anyway, that's all I got for tonight, folks. Had a good time chatting with Austin. As always, I feel like we actually text each other so much in between that y'all miss out on some of the really, really cool, fun stuff. But bye, Spencer. Oh yeah, everybody remember to check Matt's new channel for the Street Exchange. Keep the chat going. So whenever you're done with Amit or Steve or Matt, head over to the Street Exchange. Thank you for posting that. All right. Good night, everybody.